Good morning, everybody. Welcome back to another episode of the Market Open. I am sorry we are late. We had to fix a couple of things, but we are live. We are here, and we have a lot to discuss and talk about. I mean, the craziest thing about today is going to be, once again, the story that has kind of captivated all of our attention over the past few weeks, definitely over this week, which has been the sell-off in the semis, which obviously the biggest semi that kind of needed to not sell off this morning. But I think we all felt, at least I felt, and I'm pretty sure a lot of other people felt, after ASML earnings would probably sell off, even after good earnings did sell off. And unfortunately, that's TSMC. So we have got a lot to dive into because TSMC having a record quarter, beating all the numbers, revenue, EPS, earnings, gross margins, operating margins. I mean, every single number you could ask for that they needed to beat, they ended up beating. Market didn't care. TSMC right there, down 4.5%. 4.5% on a $2 trillion market cap is definitely not something to scoff at right there. That's taking NVIDIA down 2%. Micron, 855. That is down 5.37% right now as Micron is getting hit. SanDisk is down 7.53%. So in terms of momentum unwind, which will be a big topic that we have to talk about today, I know a lot of people are asking why, right? Why is momentum winding down? Why is the market getting hit, at least from a semi perspective, as hard as it is? I think it's a valid question and it's an important question, and it will be a question that we discuss. The problem with that question is it's ignoring the fact that the semis have been the only thing that have been working in the stock market really for the past 5 months, which is why the S&P 500, although it's taking a little bit of a hit right here in the pre-market down about 0.39%, the broader complex of companies, particularly in the Mag 7, have done very well over the past few days. I mean, literally, if you go to Micron's earnings back in June, since then, since that 1254 level, Micron is down 30%. Meta is up 30% from that same day. I mean, I would call that a rotation, right? One stock going down 30%, the other stock going up 30%. So the broader question here today is, will the momentum sell-off in semis spread to so many other different parts of the market that have been doing well? And so far, at least over the past couple of days, it hasn't really happened. Software is actually up in the pre-market. Take a look at Palantir right there, up about 0.5%. ServiceNow, Adobe, Salesforce, etc. Amazon's up, Google's up, Meta's up, Microsoft, it was above 400 right now at 399.60. Or will the rotation be as violent as the rally was for semis over the past few months, and we're going to see different sectors end up taking off? I think that's going to be the bigger question that we have to discuss. But TSM earnings has kind of kicked it off, and we'll go deeper into how this is playing out. So good morning, good morning, good morning. Thank you, everybody, for being here. We've got a lot to get into. We got Iran updates. We've got South Korea updates because Kospi, unfortunately, was down another 7% yesterday. And I think a lot of people in the country, including the regulators, are waking up to the fact that their index, which has not moved at all for the past 7 years, but decides to go up 100% in the past 7 months, being based on 2 companies that sell memory might not be the healthiest thing. I mean, just objectively, it's not that healthy. And the leverage that's in that system is not that healthy. And the regulators are now taking steps to deal with that. But obviously, the momentum unwind there is also helping the momentum downside in the United States for a lot of our American stocks as well. All right, let's get into it. Good morning, good morning, good morning. Michael, Dev, Enlightened, what's up? Vi, Kane, Dougie Dollars. Good morning to you. Thank you for being here. Triple V, thank you for the $200 super chat. Deeply, deeply appreciate that. Thank you for that super chat. I told you guys 2 weeks ago that Mr. Triple V had a nice little short. Matt Money's not the only person who shorted SpaceX. Our boy Triple V shorted. Now, Matt Money shorted it with paper money, which is why he's up in the stock draft. Triple V shorted it with like a lot more money, like $4 or $5 million type of money, which I think has turned into a lot more than 4 or 5 million. He bought the short SpaceX ETF. I forgot what it's, I think it's SNK, whatever it is. But yeah, he was not a fan of the SpaceX IPO. And, you know, again, SpaceX, as ugly as it's been, now it's below the IPO price. I said this on Twitter yesterday. A lot of us in retail did not, you know, trust this valuation. The people that I talked to, whether it's a Triple V or a Tanner or a Chris or a Matt Money, I mean, like all the people, Steve, no one thought this made any sense. And so I know a lot of retail got bagged on it, but I also think a lot of retail were smart enough to be like, this is stupid. We're not going to, let our hard-earned money go away because the VCs on TV that had this thing at $100 billion market cap are saying it's a good deal at $2 trillion. So I do think a lot of retail protected themselves. Rocket Lab right there down about 3.4%. But you had a decent amount of people, kind of protect themselves from this downside momentum. Jack, good morning. June, Derek, Justin, Munya, what's up? What's up? What's up? Tess, good morning. Patriots, Chels, Broccoli Bob, Anthony, Kinjal, thank you for being here. Dominic, Kane. All right, let's get into it. And let's get started. So I think let's do TSM and let's see what we got going on there, because TSM right here kind of is the basis for the pain we're seeing. We also had UNH this morning. UNH crushed it. That stock's up 6%. So the sort of healthier plays that needed to do what they had to do in order to prove that there is a real rotation happening outside of momentum, I think it started to do really well. And you're seeing UNH up there 7%, which we will get into as well. So TSMC, first of all, let's get into these kind of core earnings. And then we'll go deeper into what we've got going on. So revenue, $40.2 billion. That's up 34% year over year, 12% quarter over quarter. Gross margin, 67%. The street thought it would be 58.6%. That is a massive beat on the margin profile for TSM. Operating margin, instead of 49.6%, it's at 60.3%. CapEx, $26.8 billion. They're now upgrading CapEx to 64 billion versus expectations of 60 billion. That's up 36% year over year. Wafer shipments up 17%, 4.36 million. Wafer ASP, $7,881, which is now 13% higher than what was expected. So TSM, on all the numbers that really mattered, is really doing what it needed to do. And I think the market obviously was excited about the earnings. The problem is, and this is kind of the scary part about what's happening with TSMC and ASML, it's like the numbers are really good, but the stock is not reacting in a way that you would want it to react. And there's one of two things that happens there. We saw this with NVIDIA and Palantir, right? You put up massive numbers, but the market doesn't give it a premium, means that it's already baked in. Like, it's just that simple. I don't even think it has to be that much more complicated. If you are a company that has a premium to your stock, and your stock has done very well over the past couple of years, and you are putting up the best numbers that the world has ever seen, that your company's ever seen, and your stock can't move higher, it means the market feels at the end of the day like they've given you enough of a premium, and you don't deserve to have another premium. Effectively, you're doing what you were supposed to do to at least keep the stock elevated, and you can't do that much more to take it to a higher level. And I kind of feel like the broader semis are experiencing that right now. Maybe big tech will come in and save them by saying we're increasing our CapEx projections, and all these smaller names like Corning and CoreWeave and Nebius, which all of those are getting hit so far in the pre-market, will go a bit higher. Nebius right there at 191. But we already know that big tech is going to say that CapEx is going up. We already know that the earnings projections for the picks and shovels of this AI revolution are, not peaking and are only continuing to go higher. Air Test Systems was a perfect example of that. TSM and ASML were also perfect examples of that. Air Test Systems right there was up 50% yesterday. Then it ended up only being down 20 or up 20%. Now it's down 5% in the pre-market. So the earnings projections are baked in to be really good. The large cap semis and the small cap semis, like Air Test Systems, whether it's Air Test Systems or TSM, are putting up the numbers that they need to put up. But these stocks are not moving. And it feels like that is more of a structural problem with these names. ASTS did a $1 billion dilution yesterday, by the way, for those that are asking. That's why that stock is down 13% on a senior convertible note due 2034. And that's why those names have been taking a hit. Is NVIDIA down pre-market? NVIDIA is indeed down 1.59% pre-market. So it begs the question, why has there been such a historic July momentum sell-off? And quite frankly, the answer to that question might be based on what we talked about all throughout June. July is bad for momentum-driven stocks. It's kind of that simple. The average July for high beta momentum, not for the S&P 500, because the S&P is actually up in July, but for high beta momentum, is down about 4.5% for the past 5 years. Goldman Sachs high beta momentum index is now down 24% month to date through the first half of July, the first 15 days, the worst performance since April 2009. Morgan Stanley's tech momentum index 17-day rate of a charge down is negative 35%, the worst ever recorded through the 27-year history. We are having a worse high beta momentum drawdown in 2026 than we had in 2008, or that we had in 2020, which is kind of unbelievable. In fact, I was at dinner last night with someone, and that someone has a friend who works at Citadel, and they told me that that friend that works at Citadel manages a $100 million book, and their entire P&L they lost in the past month. So they manage a $100 million book at Citadel. Their goal is to obviously take that 100 million and turn it into more than 100 million. They were heavily rooted in the high beta momentum semis trade, and they basically went short SAS as like the way to hedge, which is kind of affirming to me that this is what all these institutions have been doing. They've been shorting software and going long semis, and the short software was their hedge to be able, and it was a consensus trade, right? So it made sense. You wouldn't get fired for taking that trade because, like, you know, your boss would be like, okay, if everyone's doing it, then this wasn't like a stupid thing to do. And they lost their entire P&L on that $100 million in the past month for the entire year, which now begs a question to that person managing that book at Citadel. Do you go long the software names now and cut your losses in the semis and hope that, you know, going long Palantir, Zeta, ServiceNow, Meta, Microsoft is going to be the way that you get your P&L? Or do you double down on the semis dip, double down on your software short, and hope that the rotation comes back to the Nebuses, the CoreWeaves, the Microns of the world, and play it that way? I feel like a lot of people, and this is not just retail, right? A lot of institutional investors, I mean, every single institutional analyst after that Micron earnings came out and gave it a $2,000 or $1,500 price target, a lot of them got wrapped up in the hype and momentum of the moment of those earnings, which was for a good reason, because Micron probably deserves to be higher than this when you just look at the 4 PE and try to value it from that perspective. But the cyclical nature of those earnings not being sustainable enough, even if they are somewhat more sustainable than the previous cycles, has, I think, decimated a lot of the sentiment and momentum around what we're kind of seeing right here, which is why this is so ugly. Are there no stop losses at Citadel? You know, at the end of the day, a lot of these institutions are just human beings running these books as well. But I was surprised when he told me this as well. But his hedge wasn't a stop loss; it was shorting the software names, which had worked for 5 months. You know. So sometimes when something is working, it's working. And you know, just like retail, it was greed. You know, they could have sold their book a month ago and made a ton of money, but every day when you're seeing the software names go up and up, or the semi names go up and up and up, it's one of those things where you're just like, all right, I can make even more money. And you know, I think we're seeing this on X a lot right now. I think there's just a lot of people that were heavily leveraged in the semi names. And they didn't sell, you know, and it kind of reminds me of myself with Robinhood back in October of 2025. Like, that's what I was telling him last night. I was like, dude, at 150, as much as I love the stock, I needed to take some fucking profits. Like I needed to sell some stuff, you know, like it was almost like I thought the stock would never go down. It's like, for someone who understood that company so well, for someone who had done so much research on that company, you forgot about the part where you have to sell, because inevitably, you know, it probably reaches a short-term top. And I would have saved myself a lot of money if I did that. And so I think it's human nature at some point, if you're levered up in Micron or SanDisk and it just keeps going up and up and up, and you feel like a genius, to the point where when that reverses, it reverses, and it reverses violently. And we're kind of seeing that right now. Now, I don't think that means these names have to be stuck at these levels or we've hit the top of the overall trade when it comes to CapEx. But obviously right now it's liquidating a lot of people and it's hurting a lot of people, which is why we're seeing a lot of pain right there. United Airlines, that's down 3%. UNH crushed their EPS and revenue estimates. That stock's at 450. Shout out to anyone who is in UNH. It's been a long journey on this one. Shout out to our boy Chris Patel. He'll be on the market close as well today. We'll have Macro Thursday. He got a lot of shit for talking about UNH when it was stuck in the 250s. It was one of the more boring names that was out there, but it's done its thing. And it's outperformed a lot of the market right here, as it's been a pretty nice mean reversion play. EPS on UNH, the street wanted 492. They came in at 638. Talk about sandbagging. Beat this thing by 30% Revenue 112 billion versus 110. They beat by 1%. EPS is up 56% year over year. And that is a re-rating that we're seeing on UNH, which is very exciting. We started at 8:50 today. It was a little bit late. We did not start at 8:45, so I was indeed late today, but we are here. Do people lose their jobs if they lose that much money? You know, that's one of the questions I asked him. I was like, so like, what's going to happen to him? He's like, I don't know, but he's going to have to deal with that with his boss. And like, see, I mean, look, at the end of the day, if he's managing a book of 100 million and he lost his entire P&L in a month, and he's like, you know, a sophisticated trader, I would imagine his higher ups are going to give him the opportunity to go back and make that money. But he's probably not the only one. right? This is a lot of this stuff is pattern recognition and going with the herd. So if you're losing money, as long as everyone's losing money with you, it's hard to get fired because everyone's screwing up. The hard part is when everyone's making money and you're not. Ironically, that's what leads people into these crowded trades. When everyone's making money on memory and you're the one person that's not making money on memory, you feel like an idiot. You feel like you have to get in. It gets the best of everyone and it ends up taking them down. Why have I not bought any memory stocks this year? Number one, there's a general premise that I've had, which is that, NVIDIA suppliers should not be worth 30% of NVIDIA's market cap, or shouldn't be worth 50% of NVIDIA's customers' market cap, because they're the ones who are actually controlling the flow of capital. And as much as memory is important, at the end of the day, that flow of capital can shut off or be optimized in a more pristine way. But number two is like, I just told myself I missed it. I missed it, and it's okay. When Micron was at 1,200, I was on an airplane to Singapore. I'm seeing it go to 1,200. I'm like, dude, I have no Micron, but I'm not going to YOLO in at 1,200 for the upside shot that it goes to 1,500. How does that risk reward make any sense? And I feel like, when you see every analyst say it's going to 1,200, it's going to 1,500, 2,000, that's when most people were like, oh my goodness, these earnings are just so amazing. I have to get in. Unfortunately, I think that's what happened with SK Hynix and Samsung in Singapore as well. And that's obviously led to this bloodbath. Wow, SK Hynix 164. This thing was 195 on Monday, as this one is now continuing to take a hit. So you're seeing a really, really ugly move down here in momentum. I will say, though, at some point, these become pretty easy dip buys. I mean, DRAM, we get that into the 40s. It's at 53 right now. I think nibbling there is not that crazy. I think even today, nibbling here, it's just a question of how ugly. So Micron fell to 878 yesterday and then rallied all the way up to 920, then closed the day at 904. Now it's at 862. I wonder if the market actually lets it stay in the low 800s and needs a flush out to 750 before it goes higher, or this dip gets eaten up, because at some point this is still a big stock in the overall market that has a lot of market cap associated with it, and for it to downturn and unwind that easily, I don't think is necessarily going to happen. Same thing with a lot of the other semiconductor plays that have been getting hit, like a SanDisk, et cetera. There's a lot of institutional investors that are losing money in this as well that probably want to keep the stock propped up. Same thing with ASML, down about 1.6%. So I'd be very curious today to see how ugly it gets, but I think it's a question of risk reward. Like, if you're entering into Micron today, do you think your risk reward is suitable enough versus buying something that maybe might not go up or down as quickly, but is a bit more sustainable? And that's an individual question that everyone has to ask themselves. But if these stocks, get to a certain question where it just looks absolutely stupid, I think retail will come in pretty aggressively. But right now, I think retail is struggling to kind of determine what is the risk reward profile on many of these names. Penguin Solutions, that stock got a lot of love 2 weeks ago. That is down 5%. Intel, 140 to 100. That's down about 2.5% as well. Many of these names just taking a much deeper hit right here, as we're seeing more of this pain. Semis are so discounted right now, they will go back up in the next few weeks. I also think, to see semis kind of tick back up towards the end of August is very reasonable, given, once again, July sucks for high beta momentum. The high beta momentum names are the semiconductor names and really the space names today, which have been taking the biggest hit ever since the SpaceX IPO. 10-year right there at 4.59. So again, it's an individual decision for those that want to kind of buy the dip on these names. I do not think it's crazy to nibble on them, but they all go up, they all go down at the same time. And there's very little nuance between the neoclouds, the memory names, the wafer companies. Like, if Dell is going down 10%, so is HP, so is SMCI. You got all the other names that are going to follow, and they'll all reverse at the same time as well. Which honestly means if you just don't want to pick stocks, SMH might also be not the craziest way to kind of play this rally as well, as SMH has effectively lost about 30% of the past couple of days. Brent crude is at 85, WTI crude's at 80. So oil, unfortunately, has flipped up above $80. That is also part of the reason why I think the market is taking a little bit of a hit today as the Iran situation gets bad. So the quick updates on the Iran situation are very simple. Trump said last night that he thinks Iran wants to make a deal. He said, I just got a call as I was coming here to this conference that he was at. He said, they always want to make a deal. I can tell you they want to make a deal. If you're not doing it like I'm doing it, though, you're never going to make a deal with them. So Trump is pretty confident on being able to get a deal. But at the same time, the Wall Street Journal reported that Trump is getting very serious around putting boots on the ground. I'm kind of leaning towards Trump more likely than not taking more hostile military action versus negotiating a new ceasefire and a new deal. I just feel like he's saying that to say that, but there's not really that much momentum or excitement in order for these two guys to come make a deal. So that would involve not only boots on the ground, but that would involve hurting the water plants and broader infrastructure, power infrastructure of the region, which if that were to happen, I mean, Iran's going to fight back. Iran's going to hurt their proxies. It's going to become a pretty ugly thing, which I also think is not good for high beta momentum. It's not good for anything when it comes to stock market, but it's definitely not good for the names that are the most levered up, even though those names benefit from CapEx. And theoretically, even if we start this massive war in Iran, I don't think Meta or Google are stopping any of their CapEx. But the sentiment around high beta, when you have that level of uncertainty, if oil were to spike up again and potentially inflation spikes up, which means you get rate hike probabilities going up, that obviously would hurt high beta names. Even if, we raise rates by another 50 bips, it's not going to stop the CapEx that's going to a company like Nebius or Corning or CoreWeave. But the market's interpretation of it obviously is not going to be positive. 682 right there on Meta, as that's up in the pre-market as well. So, I mean, that's another thing. You have that constant level of a headwind that is just rooted in this geopolitical conflict that has not really been going down. And, that's been a broader issue. Now, on top of that, you have some news in China that I also think is hurting the semis right here, which if this is the reason the semis are down today, I also think this could be a relatively easy buy the dip if this is the core reason, but this might be one of the reasons for why you're seeing some pain. So there's a Chinese AI startup called Moonshot, and they are looking to challenge Anthropic with a new model dubbed Kimi K3 to be released tonight. The largest Chinese model ever at 2 to 3 trillion parameters. The benchmark performance is superior to 4.8, but inferior to Fable 5. And they're now raising funds at a $31.5 billion valuation. The other big problem with this semiconductor trade right now is that the open source models are taking away all of the market share from a mind share perspective, not the actual market share, but the way people are thinking of, how we deploy models, especially in the enterprise, from the frontier labs. Obviously, and Anthropic and OpenAI still have gigantic businesses, but you have a lot more people that are coming out and saying, why do I need to spend on the frontier models if I don't see the ROI on the frontier models, or I don't believe that the frontier models are going to be significant enough in actually saving costs. And one of the vice presidents of IBM actually said this yesterday, Gary Cohn, making the argument that the ROI on all of this CapEx is starting to be questioned a lot more. Doesn't mean it's going to be stopped, but you have a lot more people wondering what should they be spending on these models. So if you got the Chinese coming out saying that we're going to make a model, Anthropic's getting ready to go public at what, $2 trillion valuation. A Chinese AI startup called Moonshot now raising funds at $31.5 billion with a model as good as Opus 4.8. Like, it really brings into question, why would you pay as much as you're paying for Anthropic? And the bulls would say, well, look at Anthropic's growth. It's like, okay, but once again, just like Micron, is that growth sustainable? Because if it's not, the market discounts that really quickly. And for all intended purposes, it feels like that growth is not slowing down anytime soon. But the fears of it potentially slowing down is where I think we're seeing a lot more of the pain. Here's what IBM's vice chairman said yesterday about this open source model stuff, which is potentially causing some of the pain in the CapEx trade.
Were made months and months ago. And now today, in those budgets, people are spending exorbitantly more actual dollars on tokens than they would have thought they would be spending at this time. If your budget's X and you spent 0.9X on tokens, you're not going to invest in CapEx. You're not going to buy that new machine. And all of a sudden, I think companies got caught up in this wave that they had spent so much of their token budget on their IT budget that they had to cut back somewhere. But I actually think what's really going on is, and you've seen this, is people are starting to think about what's been the return on investment in my AI tokens. Are they a good investment? Are they paying for themselves? Should I cut down on tokens? Should I actually go back to reinvesting in my enterprise infrastructure that I know works very well? And I think we're having that conversation going on in a lot of IT departments, a lot of boardrooms, as people start budgeting for next year. And as people are unsure whether they really want to build out their hardware, mainframe, software infrastructure, or they want to build out their AI infrastructure, they tend to pull back from a deal here, a deal there, a deal here. And when you're...
So that's IBM's Vice Chairman kind of trying to justify why at least IBM suffered in Q2 preliminary results based on this CapEx rotation that went from software to CapEx. Again, I think that's more specific to IBM. But the broader point he's making, IBM right there at 210, down from 260 a few days ago, is that more and more enterprises are questioning the value of their token costs. That doesn't mean they're going to stop spending. That doesn't mean token costs aren't valuable. That doesn't mean they don't want to invest in AI infrastructure. But they're starting to question it more. And those questions are good questions. Those questions actually are healthy and important questions. And those questions, quite frankly, don't even change the rate of spend. Like, questioning your token spend inside of your organization is not going to stop you from either buying more chips, buying more infrastructure, buying more memory. None of that stuff actually does anything to the earnings of the companies that are part of this entire AI build-out stack. But it does affect sentiment. And sentiment is the perception of how these stocks end up trading at the end of the day. Gavin Baker actually put out a really good post yesterday. And he has been one of the biggest bulls in this broader AI revolution. And here's what he said that I thought was also very, very interesting. He said the mega bull case for AI infrastructure would be if market share shifted away from certain frontier labs with 90% inference margins towards cheaper models, whether open sourced or closed. It would increase the ROI on AI spend for end customers by increasing intelligence per dollar, which would drive incremental token demand. Margin dollars would effectively get redistributed from frontier labs, OpenAI, Anthropic, etc., to AI infrastructure providers, Micron, Dell, HPE, Corning, etc. The infra winners would be those with the lowest per token cost, and the winners at the model layer would be those with the highest token efficiency, which theoretically is a bit more exciting for the broader semiconductor stack build out and not as exciting for the frontier labs. There are many reasons Jensen is so focused on open source, but this is likely the most important one, as I think he is probably less worried about a monopsony these days. Lower margin percentage at the model layer equals more margin at the infra level, all else equal. AKA, if the models aren't taking as much margin away to be able to give you the tokens, the AI infrastructure names can charge more margin to build the infrastructure necessary to generate the tokens in the first place. He says, with SpaceX and Meta being vertically integrated and processing the number 3 and number 4 models respectively, it is more possible than ever. Note that Grok 4.5 is ahead of Fable for some useful tasks at a much lower cost, so ranking them number 3 is conservative. This is not happening yet. It's cheap. Most open source tokens are likely the majority of volume today, but the majority of economic value is still accruing to the most intelligent models, which might change. AKA Anthropic and OpenAI are still taking the majority of market share and mind share when it comes to how the models are effectively being put out into the world. So the TLDR on kind of what's happening right here is TSM crushed earnings, ASML crushed earnings. The reason why a lot of these semi stocks are down is because I think the sentiment around the CapEx build out has changed. The fundamentals around the CapEx build out have not changed, but the sentiment dictates everything. Now the question is there a mismatch and a dislocation between sentiment and the fundamentals, which provides a dip opportunity, which has happened basically for the past 3 months every time the semis have had any meaningful dip? Or is the sentiment shift not even really being priced in yet? And if it were to be priced in, these stocks will be 10% lower. I don't know the answer to that question. I don't think anyone knows the answer to that question, but obviously the price action over the past few days has been pretty brutal. And maybe it's just a consolidating normal type of price action. I mean, Micron is still up 650% over the past year and 150% year to date. So, the 1200 level might take some time to get back to, but you just can't complain that Micron hasn't done its thing, because it absolutely has done its thing. It's just, if it's a $980 billion company versus $1.2 trillion company. I mean, Micron was, surpassing Meta in market cap a few weeks ago. That just felt like it didn't make sense. It might happen again, but I think that is what I mean by sentiment. Like it just got so aggressive where people kind of stood up and said, all right, this probably shouldn't be happening as easily as it is happening right here. So we're going to see. We're going to see how this ends up playing out and how this officially happens. But right now it is obviously a bit more uglier than now. Monopsony is a word, guys. Monopsony is a word. You guys should know this word. We talked about it. Sham Sankar actually made this word. It's not monopoly. He meant to say monopsony. Monopsony is an imperfect market condition where a single buyer vastly dominates the market, giving them the power to dictate prices, wages, and terms to competing sales. So it's a buyer's equivalent of a monopoly, which is why Sham Sankar has said so many times that We need to have a change in the monopsony that is DoD spending, because the buyer effectively has all the leverage, whereas the seller should have a bit more when it comes to selling into the government. But yeah, he used the word in the right way right there. ASTS, what happened yesterday? So they diluted. I have not read through a bunch of the people who cover ASTS and their analysis on the dilution, but from my understanding, this is a healthy form of dilution for the next phase of build out when it comes to building their satellite ecosystem and infrastructure, which I would imagine you would have to say that if you're getting diluted by $1 billion. The thing that's really troubling here on ASTS is that, Rocket Lab diluted at 130 and they diluted effectively at 130, $3 billion at 130. The stock is down more than 50% since then, 74.15 down 2.69%. But Rocket Lab got $3 billion out of it before it fell. I mean, it's a smart thing to do. Why did ASTS not dilute when the stock was at 120, 130? Why are they diluting it? Like 70, 65? I mean, I don't know, man. That was the one thing that I think was pretty annoying about the dilution, is like they had a chance to do it when the stock was a lot higher than what it was yesterday, and they didn't, which is just like horrible timing on man. I mean, you got to give it up to Rocket Lab. They understood the stock was expensive. There was an opportunity, and they took advantage of it. And unfortunately, some of the other space names didn't do that. So I think that's why that stock is getting hit so hard, but we'll see if that one ends up getting a recovery. But obviously it is getting hit right here. US June retail sales were good, 0.2% month over month, the strongest categories in June that contributed to those retail sales going up. Online sales, 1.9%, auto and parts up 1.9%, sporting goods, hobbies, music, and books were up 1.3%, electronics were up 0.8%. So we had CPI come down, we had PPI come down, and we had retail sales go up. This is another reason that the sell-off in the semis is kind of confusing, because you had CPI and PPI actually come down meaningfully, which means, the inflation concern on a lot of these names is not as aggressive, although the problem is oil is spiking up back to 80. So it's kind of offsetting the CPI and PPI decline. And then gold lost 4,000 last night as well. Silver right there below 60. So I think this is the other thing that I'm hearing from people that are, concerned about the semis. When gold and silver topped, I think January 30th was it. Silver was like 120 and gold was 5,600. It was either early January or late January or early February. It didn't come back. It did not come back. Now, gold and silver don't really have the kind of fundamentals like earnings and cash flow and all that stuff to be excited about it. But I think a lot of people are wondering, hey, did Micron top at 1250? Like, did we actually see the semis top? Was that it? And now we're just in this long, drawn out, choppy drawdown where we have to navigate it? Or is it going to be something where there's earnings, there's momentum, there's sentiment, they can take all this stuff back up? I would lean towards the latter over the former, because gold and silver are more macro rooted assets that really need rate cuts to get the market to be more excited about them. Same thing with Bitcoin and ETH, which unfortunately are taking a hit, although they were having a really good day yesterday. Bitcoin right there, 64,000. But I think that is, some of the questions that are being asked right now about the semis trade. It's just the problem is every time you ask those questions from a perspective of has it topped, you remember how compute constrained we are. And either that narrative doesn't make sense anymore, that we're compute constrained, so the supply-demand imbalance is going to lead to higher earnings growth, and that higher earnings growth is going to be rewarded with a premium on earnings multiples that will expand for a lot of these companies, which has kind of been the thesis all year. Or people will say, even if we are compute constrained, even if we do need a lot of energy and power and chips and CPUs and memory and all that stuff, look at all those stocks. Look at their performance, not even year to date, but over the past 2 years, they've all priced in a massive amount of growth. I can tell you Intel has absolutely priced in all the growth that their multiples implying. Like, if you're buying Intel at 100, are you buying it for a 120, a 20% move? Are you taking the risk of buying something that's gone up 6x for another 20% move? Does that make sense? Or do you think it can go to 200? Because if you're buying it to go to 200, that's a double from here. That's a really good reward. But now how much risk do you have to take in? And more importantly than the risk you're taking on the stock, how much execution, flawless execution, does the company need, AKA the easy money has been made, is kind of the thesis on a lot of these semi names, in order to get that re-rating? Because if the easy money's been made, now it's all a question of execution. I mean, same thing with Hood and Palantir, right? Like, the easy money has been made on those guys. They need to flawlessly execute. And Hood last quarter, didn't do the best. 15% earnings growth wasn't the strongest, although their Trump initiative and all the other different things they've been rolling out with crypto has re-rated the stock. Palantir has had flawless execution, but even with that flawless execution, because the easy money has been made, the stock hasn't really been able to make a move. So I think the same thing comes down to the NVIDIAs, the AMDs of the world that have market caps that are now potentially fully valued, even if the multiples are small, and how much more growth do they need flawlessly for the stocks to come up even higher? And I think that's the broader question. Why is quantum getting hit? I think IBM, which is the biggest quantum name, going down over the past couple of days. D-Wave right there down about 2%. IONQ down. Rigetti. That's kind of taken all the quantum names down with it. So if you're a believer in quantum, this is a pretty aggressive dip over the past 2 weeks. IBM leading it. But I would say IBM down is part of the reason why that is happening. I think another question that people are wondering about now as well is, when is the build out over, right? Because you're hearing a lot of different perspectives on this. Some people are saying it's not over until 2030. Some people are saying, dude, the CapEx is going to top by next year. Some people are saying, well, 2028, you're going to start to see the rate of decline of CapEx. And it's like easy to say the CapEx is not going to slow down, but it's also hard to say the CapEx is not going to slow down because you just don't know. And what if Meta decides next year or the year after next year that they've spent enough on CapEx and they're going to still spend, but it's just not going to be as aggressive of a spend, which is all you kind of need for sentiment to immediately be like, all right, Meta's not spending as much or it's not growing as much, which means the money will still be there, the earnings will still be there, but they're not going to grow as aggressively for the picks and shovels plays. Therefore, we might as well rotate. Like, I feel like that's all you need for that to shift. And I feel like the market's trying to front run that before it happens. And there's no indication that that's going to happen. In fact, every indication is Meta's going to spend around 220 to 240 billion of CapEx in 2027. But once again, the weird part of this entire year has been, do we sell off Meta and buy all the names that are benefiting from Meta's CapEx when at the end of the day, those earnings aren't really sustainable because it's Meta dictating the flow of capital, Microsoft dictating the flow of capital, Amazon, Google, etc. Or do you buy the discount on the Mag 7 and just say, I'm not going to try to time the picks and shovels, and I don't need to time the Mag 7 because I could buy them at the top, I could buy them at the bottom, and they're going to do well over the next 5 years because they're the freaking Mag 7. And, these are the most important companies in the world. And I think that sentiment rotation around the idea that I just buy sustainable companies that, are going to do well. It's easier to do it now because the stocks have started to run. It has not been the easiest for a lot of people to do it over the past 2 months where, the Mag 7 have basically been dead every day and the picks and shovels plays have been going up. But I think that level of excitement on the Mag 7 is starting to come back. Is it sustainable? I don't know, because every time you think it's going to happen, the software names are going to come back, et cetera. The semis just come back with a ferocious amount of power and the dip gets bought pretty easily. This has been the first few weeks where that dip has not been bought. And I think now more people are questioning if that's going to actually play out the way that it's going to play out. All right, we got a minute left. We have actually 30 seconds left. And in the next 30 seconds, on Thursday, July 16th, we will be opening the stock market. And in order to open the stock market, we'll be ringing a bell for those that don't know. So, in order to wake up and to wind down, to go to bed for those watching internationally, you got to make sure to not mute the bell. Here we go. Thursday, July 16th, the stock market is now open. All right, weight grass is up. Let's get into it and let's see where the market is going here today. S&P opens up red slightly, 753.26. So we are a bit down as we are getting into the market open. Wow, Robinhood immediately getting hit. This thing was acting like 116, 115 was normal yesterday, right down below 113. Absolutely getting smashed right here on the open. Robinhood down about 2.2%, Palantir down 1%, NVIDIA down 1.19%, Rocket Lab down 3%, ASTS down 10%. This is actually a lot better than where it was before. It was down 14% in the pre-market. Micron, nice little dip by from 850 to 873, still below 900, but 853 right there is what you got on Mr. Micron. CoreWeave, that's down about 2.9%. Nebius loses 190. 188 right there, down about 5.3%. TSM record earnings, that stock's down 2%. Rocket Lab down 4.7%. I think that's falling in sympathy with ASTS. There's no headline on that one. SanDisk is down 5. Ondas is down 4. Apple, once again, all-time highs after hitting all-time highs yesterday, which is pretty freaking incredible as that name continues to do well. Fastly, 20.58. So your CDN's getting some love right here. Akamai, that's also up 1.3%. Rigetti, IONQ, D-Wave, those are all down 3%. Palantir down about 1.5%. Lucid is down about 5% as that one was projected to theoretically go bankrupt over the past couple of days. And it's starting to, it has recovered when the CEO said they weren't going bankrupt, but that rumor definitely took them down. Lumentum is down 2.8%. IREN, 3.4%. MicroStrategy down 2%. Morgan Stanley down 1.2%. I think all your photonics names are in the gutter today. They are indeed. Coherent, that's down about 3.9%. AAOI, the stock was at 240. It is now at 106. The momentum has absolutely flipped in the wrong direction as Robinhood also gets hammered right there, 111.63. So it's kind of everything. It's not just the small names. ServiceNow, that's down about 3%. Is Adobe down? Adobe is up 1%. Salesforce is up 1%. Your software names and your semis are kind of getting hit. Not all the software names, but pretty much all the semis. Microsoft, if Microsoft's going red, then I would project today's going to be an ugly day for the software names, given Microsoft should not be going red right there, but it probably is with the software stocks. UNH, market's going into safety. That's up 8% on the day. Market obviously does not want to be in high beta momentum. UNH is the exact opposite of that, $411 billion market cap. UNH is still below its 650 high from a year and a half ago. So if that is going back to all-time highs, then that has some room to run. Apple right there, 328. Netflix has earnings today. So that is going to be an important one as we take a look at Netflix after the bell. Again, the stock is trading at the lowest it's trading at since 2024 or late 2023. So we're going to see how that one reacts. SoFi, that's down about 1%. United Airlines, that's down about 3%. SpaceX is green, 1.3. I don't know if that's taking the, wow, that's not helping any of the space names. The SpaceX independently right there going green as the other space names are obviously still taking a hit. ServiceNow down 2, Robinhood down about 3.5. Marvell, that's down. Wow, Marvell loses 200. Oh my. Oh my. Marvell loses 200. AMD down 2. Let's see if AMD can hold 500. So Marvell now well below the levels that it was at after Jensen said there'd be a $1 trillion company. That has been a full momentum unwind right there. AXTI, that's down about 6%. Figma, that's actually flat, which is pretty decent on a day like this. CrowdStrike's only down 2% after being up 12% over the past 2 days. ARM also getting demolished, dude. This thing went from 450 to 330, now to 261. As this stock is down 5%. Where is CoreWeave? 75.19, that's down 2.5%, and Nebesis 191. So CoreWeave has kind of stayed steady in the 75 range. Nebius has stayed steady around this 189 to 195 range. If those stocks break those levels, aka CoreWeave's low 70s and Nebius's low 180s, then that's I think a real drawdown that we're going to see on those. ServiceNow getting hit especially hard today, down about 3% right here in the software space, although Palantir also down 3%. Okay, so it's not just one or two software names, it's a lot of them that are feeling the pain of this. Unfortunately, I think the downturn in semis and momentum, it shouldn't affect the software names, but I mean, it could bleed into the software names, right? And I think that might be a little bit of an issue that we're seeing right there. Coherent, that's down about 6%. Where is Mr. Zeta? Zeta is also down 2%. Okay, so this is everything now. This is everything. Oracle, that's down 3%. Corning, almost at 160. This is when NVIDIA bought it. As this one's also taking a hit. Online retail sales up, but Amazon is down. Yeah, that is... well, Amazon at least is holding the 250s, given this thing was stuck at 230 last week. Nvidia loses 290. For those looking for a headline, I don't really have one to give you. outside of good retail sales today, good PPI, good CPI yesterday, maybe the Iran escalations are continuing to scare the market as oil spikes up. I mean, that's a simple reason, but TSM crushed earnings, so there wasn't a reason, I think, for the broader semis to necessarily get flipped outside of, the sentiment just being as bad as they are on those names. UNH now up 8%, SpaceX up 1.4. Did they say NVIDIA was 290? Sorry, I meant to say 209. We're losing 209. NVIDIA was 290. That would be kind of fun if NVIDIA was 290. Wow, Meta's getting hit now too. Okay, more of these names starting to go red. If the Mag 7 participate in the downside, Google flipping red as well. It's unlike yesterday where the Mag 7 flipped green and semis were red. Today it's a little bit more of everything. If we actually see them officially kind of move down, Amazon down about 0.5% as well. The other thing that happened in South Korea, which I think is part of the reason why SK Hynix has been taking a hit, is officially, as of last night, South Korea is now halting new listings of single stock leveraged ETFs. South Korea will be halting new listings of single stock leveraged ETFs. SK Hynix right there, down about 5.7%. So, in America, there's a ton of single stock leveraged ETFs on many stocks. I think the latest ones have been on SK Hynix. I don't know if this is the time to get super levered up on a South Korean stock that is propping up the entire index in South Korea that is now being banned from having new listings of single stock levered ETFs. But the country is realizing that some of the behavior here is just not healthy at all. SK Hynix right there, that's down about 5.2%. Oracle down about 3%. I think we need to get through earnings. The problem is we've had two really big companies like ASML and TSM have really good earnings, and they can't help the semis. So maybe we need to get through Mag 7 earnings. But look, at the end of the day, it also felt like this was kind of inevitable. And I also don't think a lot of portfolios, if you haven't, I think a decent amount of people have not made a ton of money in the semis this year, including myself, because you didn't see Micron at 300 as a deal. You didn't see, Corning when it was $70. And so the downturn here is not that effective as long as you didn't get super aggressive buying into those names. You could have bought some of those names as they were higher. But if the significant percentages of your portfolios are still the names that you've owned for a long time, and you have really good cost bases on those, like a Rocket Lab for a lot of people, or a Palantir, or a Hood, or a SoFi, or an Amazon, or an NVIDIA, or a Meta, Google, etc. So many people here got into Google, before it doubled last year. Then I feel like portfolio performance shouldn't necessarily be down. It should just be flat, if not starting to actually get some momentum because you're seeing a rotation. So I think this downturn is really affecting the people that are super levered into semis. And quite frankly, if you got into AMD at 200 and it goes from 580 to 514, even if it were to go down to 400, you're still up a lot. And so the question just becomes then, did you buy a ton when it was at 580? Did you lever up with calls at 580, et cetera? And those are getting crushed because obviously if you levered up with options, those are getting crushed. But if not, then I do think a lot of portfolios are benefiting from this rotation. Now, if the rotation names start to get hit, like the Mag 7, the software, the fintech names, that starts to hurt everybody. But I do think there's a shift happening from the people who are heavily levered in CapEx names making most of the money the past 5 months to the people that were buying the boring stuff that are not like a UNH. If UNH is a big part of your portfolio, or at least as, even if it's a couple percentage points, some money is being made, which I think is not that crazy. Corning right there, down about 6% now. Salesforce is about to flip green or flip red. So is Adobe. Microsoft officially flipping red. Robinhood 112 as that's going down. Nevi is trying to hold on to 190. Palantir loses 130, which isn't fun, but it's losing 130 right here. So all the high beta software names. Rocket Lab, if it loses 70, that's actually going to be kind of disgusting. I'm not going to lie. It's going to be kind of disgusting. Like, that would be kind of crazy if it loses 70. But it looks like it wants to lose 70 right now. And unfortunately, I think it's doing that because of ASTS. If ASTS didn't do dilution, I feel like Rocket Lab would have at least held up in that 75 range. Down 7% right there. UNH up 8.5%. Why is Palantir jumping off a cliff? I don't know, but it's not just Palantir. It's ServiceNow. It's Oracle down 4%. It's Zeta down 4%. This price action feels like it should have happened yesterday, because yesterday we had the more sort of egregious announcements around Trump and Iran. And you would think geopolitically, if Iran is going to lead to more escalation, that's going to lead to higher oil prices, then everything should go down. But that didn't happen yesterday. Yesterday was just the semis. Today, it's kind of everything else, which means maybe that Iran stuff is starting to be priced in more aggressively. And that's why we're seeing some more downside momentum. Qualcomm down about 4%. Nokia down 5%. Tesla. Nokia is down because I think Ericsson's earnings weren't that good. And so Nokia is going to have to put up some big numbers in a couple of weeks when they have earnings. But Ericsson, which is adjacent to them, didn't have the best earnings, and that's why that stock is taking a hit. AppLovin, that's down 2%. QXO, that's down 0.5%. Reddit, which should be doing well right now, given it's a software name, that one having a complete flip as it's more in the high beta bucket. Admit, isn't this war stuff bullish for Palantir? I don't think any of the war commentary has been bullish for any of the defense contractors this year. It was bullish for like a week in March, and then the market woke up and was like, wait a second, no matter how much money we spend on drones or defense software, etc., a war means oil is going to go up. Oil going up means rate hike probability is going to go up. Rate hike probability is going up, means that growth stocks are going to get hit. CoreWeave 74.81. And that's bad, right? So I think in general, AST is now down 11. The defense thesis hasn't really helped any of the defense vendors. SK Hynix down 8. Again, for those asking why, I really can't tell you why. Every headline this morning was not bare. The only headline that I think could be part of the reason, there's actually two. Number one is the China moonshot company that technically built a model as good as Anthropic Opus 4.8, and they're only at a $31 billion valuation. Maybe the market's just like, if these Chinese models are worth less than $100 billion and they're 90% cheaper, why are we giving Anthropic this massive valuation? And if we don't give Anthropic, OpenAI these massive valuations, what does that do to the broader CapEx trade? That could be one reason. The second reason could be, yesterday we talked about it, CoreWeave is looking into buying financial derivatives and put options on memory chips to be able to hedge their exposure to memory pricing, because there are some fears inside of CoreWeave that was reported yesterday by Bloomberg that memory prices are going to start to come back to reality. Now, I didn't think that was the biggest story in the world, but then Evercore came out yesterday and put out a note to their clients saying, this is the reason we think the semis are selling off. We think the market is interpreting CoreWeave's hesitation on memory pricing as an indication that one of the biggest data center providers in the world understands that the memory euphoria can't last forever. And if that happens, maybe that takes down all the other semiconductor names. So that might be a little bit of a stretch, or it might be more of a legit reason. But I think that, combined with some of the Chinese news today, along with oil spiking up, that gives you a good old fashioned sell-off in the month of July, which is what we're seeing. Sam says you don't really need a headline when everything in semis is down. Unfortunately, the stuff that goes up the most is the most volatility going down with the sectors down. That is also fair. And I think the semis going down as violently as they are in general is probably enough of a reason for why we are taking a hit. Micron, where are we at? We are 867. 851 is the pre-market low. This thing bounced yesterday to 930 towards the end of the day, man, before it came back down. So, I mean, it got a lot of people in on the bounce, because, when you go from 880 to 930, that's a pretty big bounce. A lot of people feel like, all right, the coast is clear. But then Kospi falling 6% yesterday was just devastating for this one as it continues to take a hit. Gold has lost 4K. That is correct. If CoreWeave's buys puts on memories, why wouldn't everyone? Well, I think that's the point, right? I think that could be one of the reasons why a lot of service providers in the data center space are thinking, hey, if CoreWeave wants that. Now, granted, CoreWeave is thinking of hedging their memory exposure, which is what any company that is so exposed to a commodity should do, right? They should hedge the price. This is what McDonald's does with poultry prices. But, it's a new concern that has popped up. And the fact that they're even having that concern means they think that there might be a little bit more downside to go for memory right here. NVIDIA, that's now down 3%. SanDisk obliterated, down. Wow. 14. So this is where it bottomed at last week, 1,400. This is exactly where it bottomed at last week on July 8th. Actually, it's lower than July 8th. It bottomed at 1,490. We were at 1,470. So we have officially lost last week's low on Mr. SanDisk. And now it's a question if we get a bounce or if we make even new lows from that level. Morgan Stanley, that's down 2%. IREN, that's down 4%. Lumentum, this was at 687 last week, propped up all the way to 830, now down at 716. Coherent, that's down 5%. Big flush. Big flush right here. But is Lucid a dead stock for you? Lucid has been a dead stock for the past 5 years. I don't even think that's a question. I mean, Lucid is only up because the Saudis have figured out how to artificially, I mean, just, dude, it's down 97.39%. Yeah, this is the definition of a dead stock. I don't know anyone who is taking hard-earned money and putting it into this thing at all. So yes, it is absolutely a dead stock. There's no reason to take a risk on this, in my opinion, compared to so many other opportunities in the market. And what have they done to prove that they deserve to, have a re-rating? So yeah, Lucid is that. That's why even the bankruptcy news was not news, in my opinion. But they came out and corrected. Look at that. I fell to 230 on that bankruptcy news, then popped up to 596. So if you got the lows, you're up a double. But outside of that, there's nothing that meaningful there. Micron now below 860. Rocket Lab loses 70. The lab of rockets, man. 150 to 70 in a month. Hood did the same thing, but it took like 4 months. Hood went from 150 and then it stayed at 120 for a few months before it ultimately fell back down to 70. And now it's back to 120. But Rocket Lab, this has been, is it less than 30 days? 150 to 70? I mean, this is aggressively flipping to the downside. Rivian, how's that doing? That was actually up yesterday. Rivian is down 3%. So that one is also taking a hit. Feels like this is the SpaceX effect. Well, if Rocket Lab's going to go into the 50s, SpaceX, there's no way this thing can hold up in the 130s. I mean, this has got to get to the 120s, 110s, you would think. So I actually don't know how the hell SpaceX is green right here, but yeah, I would imagine all the space names come right here down. Rocket Lab now down 9% on the day. That's so ugly, dude. That's crazy, bro. That is absolutely crazy. Let's see if it gets any level of a bounce right there. And Micron, very close to losing the pre-market low, 851. It's at 854. Fear and greed. I don't think we're in fear at all. Yeah, we're neutral. The problem is the S&P is not down. 751, 760 was the all-time high. We are not down. The market is not down. It's the semis and the high beta names that are down. So, last time we had fear and greed, the S&P was down 9% when we had like really extreme fear back in March. S&P has got to get to at least 720, 730 for that fear and greed to trigger some level of meaningful fear. Outside of that, it's just, if you're in a sector that's getting hit, that's not the entire market getting hit. SK Hynix down 9% as well. Let's take a look at the stock draft. I've got to be the lowest in the stock. There's no way I'm not the lowest. Wow, I'm still not the lowest. I guess Chris and Jason became more high beta than me, but we are definitely the bottom three. I'm at down 11. Chris is down 12. Jason's down 13. Matt is now down, even though he's barely down. Tanner's only down 1, and then Steve's only down 4. So obviously, if high beta comes back, me, Chris, and Jason will flip. But if high beta stays down, Matt, Tanner, and Steve have adjusted their portfolios at least enough to not be super high beta. And that's what you have with the stock draft. SK Hynix right there, that's down 7. Meta now below 675. Did Micron lose $1 trillion in market cap? Yeah, $969 billion for Mr. Micron. as that is down. Here's the other thing that's gonna happen if we start to see a more deeper sell-off, which let's see if we get any bounce right here, because this is pretty ugly to start off the day. So let's see if we get any bounces. Rocket Lab back above 70 right here, so a little bit of a green candle coming in. The Ed Zitrons of the world, the Michael Burrys of the world, the people that have been touting that all of this is fake, it's all a scam, it's all going to pop, it's all going to be an ugly drawdown, they're going to get a lot more attention if these stocks go down. And I don't even think we've look, this is ugly, but AMD is still above 500. You need to see AMD below 400 for this to really pop, for this to really be aggressive. NVIDIA needs to get back into the 160s, 170s. I don't think that's going to happen. I don't think we're there yet. But if that were to happen, or if we were to get close to that to happen, I think you would have a lot of the bears get a lot more attention. Now, why am I bringing that up? If they get a lot more attention, they get a lot more eyeballs on them, they get a lot more influence, guess what some people might do? They might start believing in their arguments and selling as well. This is kind of how this plays out, right? If you're a media figure and you have a lot of attention and your thesis is proving to be correct, especially if you're selling fear and gloom, it's really easy to convince a lot of people to be like, let me get the hell out and save whatever money I have before I get trapped in the worst bubble of all time. And so I think that is a sort of broader macro risk if the sell-off continues more aggressively that would lead to a compounded effect of more selling. But I think it has to get a lot uglier than it is right now. I mean, if you're investing in some of these names, you got to be able to handle the volatility to the downside, because, that's volatility to the upside is part of the reason you get the volatility to the downside. But it's just how much will people officially be able to handle. Service now looks like it could go below 100 right there, 100.96. Where is Bloom Energy? 7% down, 221. As that is continuing to take a hit. Regional banks are doing okay today. KRE, 77. Wow, regional banks are actually doing great. They're actually doing great. XLF is down, so regionals are doing way better than XLF. Micron at 859. Again, for those that are asking, there is not a regular headline I can give you outside of oil going up today for why we are red. But I feel like that's the best reason with this Iran war. Granted, I think the Iran war is troubling people as a core reason for why we're red, because, the past 2 months, every time we had a ugly Iran war headline, the semis didn't care. Even when we didn't have a ceasefire in place, the semis just went up on that news. Rocket Lab now back below 70. So is this news so much more different than the news we had over the past few months around the Iran conflict escalating to the point where the market legitimately believes it's Iraq 2.0? And I don't know if that's how the market's going to be thinking of it, then yeah, maybe we do have to feel a lot more pain as the market ends up getting re-rated. Or this is just algos and, the market's trying to flush out a lot of the weak hands in the semis. It's just, for the people that say that, it's been a month now of this, or almost a month. It's been 3 weeks of this type of price action. So, how much more weak hands need to be flushed out here? Like, do we need to go down another 20, 25% to get the weak hands out? Or is this a more structural sell-off that we're seeing right now? But at the same time, right? Small caps, look at that. They're green. Small caps are some of the most speculative parts of the economy that do bad when we hike rates. How are those green and the market's collapsing? Well, the answer is the market's not collapsing because there's a lot of parts of the market that are doing fine. Healthcare, real estate, industrials, consumer discretionary, software, which has not done amazing, but it's at least not done as bad as semis. Small caps, obviously. And that's why I think the normalness of this sell-off is warranted to be talked about as well. Because as you can see the heat map right there, it's mainly one sector, which is high beta. Health is up, Lilly's up, Moderna's up, consumer services, utilities, energy, consumer non-durables, Coca-Cola, Walmart, financials, Visa, MasterCard. It's just obviously a lot of people are, in more of the high beta names. Wow, Apple. She's really going for it at 330. Now, look, Apple's starting to feel a a little bloated, to say the least. But it doesn't really matter what anyone thinks about the valuation when they don't have to spend on CapEx. Whereas Amazon does, Google does, Meta does. And yeah, they're growing faster than Apple, but Apple's also a bit more sustainable, or has shown to be a bit more sustainable in their growth of new devices. And, when it's funny, when Tim Cook said that Micron is causing memory inflation, that was literally the top for Micron that day. That was the day after their earnings. So that was the top for Micron. And that was the bottom for Apple at 270. So it's almost like Apple, the biggest company in the world, or one of the biggest companies in the world, complaining about one of their suppliers having more leverage over. I mean, this is Apple we're talking about. This is not a small dog, right? We're talking about a commodity company having more leverage against Apple. Like, yeah, the yin and yang of how technology operates wasn't really going to allow that, it feels like. And although Micron should have leverage, they shouldn't have the type of leverage they have to the point where all of us have to pay an extra couple $100 on consumer devices because the memory companies want to inch out 85% gross margins. I mean, like, that in and of itself just felt crazy that Micron was able to charge those numbers. And it's counterintuitive, right? Because it's almost like, wow, Micron's so amazing because they can get these margins. Like, hold on. If oil companies had 90% margins, that would not be good for the commodity that is oil that all of us use every day. And in the tech world, the similar commodity is memory. And I think that ended up being, at least for now, the short-term top on the stock right there. The Q's losing 710 right there, 708, as that's now down 1% as well. Sam says Apple's a flight to safety, but also if they're really thinking about the CXMT DRAM company that is about to IPO and is 200x oversubscribed, so maybe people are assuming they can grow margins. Potentially, but I also think that Apple's not going to be able to procure memory from CXMT. There was a headline yesterday that, actually today, U.S. lawmakers are urging the Trump administration to ban U.S. companies from buying memory chips from China's CXMT. House China Committee Chair Moliner said he was alarmed, arguing that reliance on Chinese memory would create an unacceptable risk for U.S. national security, economic security, and supply chain. So CXMT going public theoretically could be bearish for some of the memory names in general, even though the domestic supply of China's demand for memory is more than enough than CXMT can even handle. But I don't know if Apple's going to be able to actually procure memory from them. But I do think Apple, is nudging Trump to be like, hey, man, like, I know you like Micron and stuff, but people can't afford this type of memory inflation. And, maybe that's why we've seen the market kind of flip on its turn. By the way, Trump tried to pump the data centers yesterday. I don't think we covered this tweet yesterday. This was at 1 p.m. It's a long tweet, but you guys can see it here on the screen. He said, data centers are tremendous wins for the states and communities. One of the biggest driving forces for the future of jobs are data centers. They are big, strong, bold money machines for the state in which they are built. And then he basically went off on New York for having that moratorium on data centers. So even Trump knows that his economy and his stock market is kind of resting on the success of the CapEx of these data centers. But obviously he has not been able to fully pump them, right? SPY is not down as much as the Qs, but we are down 0.5%. Nabesis is, wow, 187. All right, NeoCloud Space Memory are taking it the worst today. SK Hynix down 7. NVIDIA as well, still down about 2.3%. We haven't heard from Jensen in a while. They don't have earnings for another month, but after he went on that tour of pumping up every semiconductor stock last month, we haven't heard much from him. So it's going to be interesting for when the market hears from him again and kind of gets his take on where we are in the broader life cycle of AI. Jensen has said over and over again, we are not in a bubble and we are going to 1 millionx the amount of compute that again, if you believe that thesis that we're going to have 1 millionx compute, all of these dips, they end up being buys. Like, there's just too much of a constraint on the level of demand that is coming through. But the question is, is that belief there. Let's get an update on the Iran stuff with the naval blockade, and then we'll keep going from there.
Through the Strait of Hormuz.
And Senator Tom Cotton will join us on the Mideast.
President Trump is very serious about enforcing this naval blockade as he tries to figure out what to do next.
The Islamic Republic of Iran is not happy right now. They want to settle so badly. They don't like what we're doing. And they do want to settle. We'll find out whether or not we settle with them or we just finish it off.
The Iranians did something that President Trump views as a goodwill gesture, letting an American woman named Dina Karari, stuck there since 2024, go. Her lawyer says while subject to a coercive exit ban, she was interrogated dozens of times by Iran's notorious Ministry of Intelligence and Security, and although never physically detained, she suffered enormous physical and psychological hardship. Is this American woman's release going to be enough to prevent a renewed bombing campaign? Don't know. But we do know why the president has ruled out sending in ground troops to Iran.
Unless the people on the ground themselves want to accomplish that outcome. Now, we're not going to send the troops in regardless, but like to propose sending in the troops, you're basically saying that the U.S. military should do the job for the Iranian people. We're not in that business anymore. We're just not.
President Trump told our Fox Business colleague Edward Lawrence yesterday that because the IRGC is not negotiating, he is considering just wiping out the IRGC the same way that a couple years ago he wiped out ISIS. Dana.
Now, again, that is also, I think, leading to some questions around the market if we're thinking of legit putting boots on the ground and going into fight. You know, what does that mean for oil prices? What does that mean for geopolitical instability as well? Here are the pending home sales we got for the month of June as well just now.
June down 5.4% from May and down 0.3% from June of last year. That is a big miss. The street was looking for flat. Now, this count is based on signed contracts. So that's people shopping in June when mortgage rates kind of bounced around a narrow but higher range. Regionally, sales were down everywhere with the steepest drop in the Midwest, and that's actually where homes are the cheapest. Now, the realtors said in the release, this is about higher rates and higher home prices. So again, all about affordability. Now, that's the buyers. Let's move to the builders. Home builder sentiment in July fell 2 points to 34, down from an upwardly revised reading of 36 in June, according to the National Association of Home Builders. That's also a miss. Sentiment has stayed below 40 for 15 consecutive months, the longest such stretch since 2012. Now, anything below 50 is considered negative sentiment. Of the index's three components, current sales conditions fell 1 point to 37, future sales expectations down 2 points to 43, and buyer traffic fell 2 points to 23. Now, the NAHB's chief economist, Rob Dietz, said affordability, we heard again, remains the home building industry's primary challenge as elevated mortgage rates, costly land, rising material prices, and persistent skilled labor shortages continue to affect the market. A growing share of builders are now cutting prices, 37% in July, up from 35% in June and 32% in May. Now let's head over to Rick Santelli with business inventories. Rick?
Yes, thank you, Diana. This is our May read on business inventories, expecting a number up 0.3%, and it delivered. That's exactly what it was. And last month, up 0.5%, becomes now up 0.6. And here's what's noteworthy here. We know the conflict in the Middle East started at the end of February. March's read, which was up 1% in inventories, was a 4-year high, and it's been decelerating since then. And since this is a second quarter number, we want to pay attention because even though the inventory number is positive, the deceleration effects are going to be a bit of a drag on GDP. So we want to pay very close attention, of course, to this deterioration in building of inventories. And at some point, we try to match it up with getting ahead in terms of supply shocks versus how much is actually moving off of the shelves. Sarah, back to you.
Okay, Rick, thank you very much. Wanted to also continue on the data theme because we got some information on the consumer today, and it was pretty good. Retail sales coming out for the month gained 0.2% in June. That was basically on par with what was expected, down from the previous month, but the previous month was really reflecting those higher gas prices and higher prices people were paying at the pump. The reason I say it's good is because, you know, if you go in and look at the spending and then compare it with inflation for the month, which was actually negative, it shows real positive consumer demand. Break it down by category. We know gas stations were weak. Why? Because oil prices came down. That makes sense. Grocery stores, also, I think restaurants were a little bit disappointing, but there was real strength in the auto business, motor vehicles and parts up 2%, sporting goods as well. And I think it's a World Cup story. We got some previews that this was going to be a good number from, Bank of America and Citi, and the spending data showing that actually sporting goods have been a big bright spot lately around the World Cup. Here's a chart, and it's hard to see at the end there, but what actually Bank of America found is that spend increased 11% on sporting goods in the Northeast. So that's kind of a direct result of World Cup and I don't know, NBA and the finals, the Knicks winning the finals, and it's just been this summer of sport here, and that's reflected. But overall, I think, Mike, the takeaway for investors and the Fed and for economists will be consumer demand is holding up better than we thought, especially with the high gas prices and the inflation concerns people have. Yes, this doesn't capture spending on things like housing, but on these key discretionary categories, overall pretty good, 0.5%.
So housing ends up having a pretty bad miss, down about 5%. Retail sales obviously really good. And from an AI perspective, the earnings on the biggest companies this week, TSM and ASML, also really good. But sentiment shift on most of these semi names have been, I think the resounding reason why they've taken a pretty big hit. Robinhood right there down about 2%, AAOI down 3.4%. We're getting a very small bounce across most of these names. Micron 860 to 874. It's just these bounces have not been rewarded at all over the past few days. Every time they've been met with some more pain. So seeing some of these green candles come in, but there's really no basis to assume that an intraday bottom has officially been put in. Rocket Lab, again, below 70 here. It's definitely not crashing below that 67, 68 range, at least not yet. So it's trying to get buyers to come in at this level. Same thing with Corey right here, bouncing off 72 to 74. ServiceNow getting hit here below 100. CRM is slightly up, and Adobe flips red. So the software names are all red, except Salesforce, which is very close to going red, and Cloudflare, which is also $1 away from going red. So it's not even really a software rotation today. Now, they're not down as much as the semis, but Palantir, Datadog, Snowflake, Oracle, Intuit, all of them still getting hit. Oklo. Okay, so, I mean, on a real drawdown, yeah, Oklo would get hit the worst, given there's no revenue and earnings. Although the sell side is starting to get more excited about Oklo. They put a bunch of price targets on it in the $80 range because they think it's going to be a key player for nuclear. Where's T1 Energy? That stock, I would imagine, is getting hit today. That is getting demolished, down another 7%. But the solar nuclear names have, gotten a lot more attention than before. Pharmaceuticals are up today. Pharmaceuticals and financials, I would say, especially regionals. Lilly's up another one. Is this an all-time high for Lilly? I think so. No, very close to it, but not all-time high yet. Is Pfizer up? Pfizer is up a good 2%. GEV is also holding on, barely down 1%, which is not that bad either. Cheesecake is up 63%. Well, that is kind of great. Dude, did they have some specific headlines? I mean, there you go. Cheesecake Factory. Look, the fact that Cheesecake Factory has been a savior amongst a lot of this red means, there has been some level of the market saying we need to go to shit that's just easier to bet on, like a restaurant, over some of the AI CapEx names. They're making cheesecakes with AI. That would kind of be funny if on the Cheesecake earnings call they mention AI. They're probably using AI in some part of the company operations, but they could actually make cheesecake with AI. ServiceNow just getting wrecked right here, down 5%. But a lot of the software names, unfortunately, getting hit. The Qs at 712 as well. Elf is also up 3. Yeah, again, consumer discretionary Elf, Pepsi's up today. Nike should be up. Let's see. Nike 3%. Yeah. Okay, so usually when this stuff happens, it's the market's way of saying we don't want high beta at the moment. We want the Verizons, the Cokes, the Pepsis, the Elfs, the Nikes, the Cheesecakes of the world. The question is, do those outperform by the end of the year? Obviously, they have underperformed all the semi-names so far, but they are outperforming over the past month, given they're probably seen as a form of safety compared to, buying the dip on Qualcomm, which is now down about 3%. Cheesecake Factory is going to sell memory. Oh my gosh. Look at Shark Ninja. What's the ticker for Shark Ninja? Oh, let me see. Shark Ninja stock. SN. SN is up 3%. Year to date, it's up 35%. Shark Ninja's doing its thing. Again, I don't know if by the end of the year, the market takes Shark Ninja and Cheesecake and Pepsi to the moon versus rotating back into, our generation's industrial technology build out. Having said that, a lot of those names have already done so well this year that if we get some stabilization there, and it's not crazy to look, I don't think SanDisk and CoreWeave and all these names are going to be stuck at these prices towards the end of the year. But I also didn't think in October of last year that we would get such an epic decline. And I also didn't think going into Christmas, we would basically be where we were at before Thanksgiving, which was pretty ugly. I mean, if anyone remembers Thanksgiving, we had a week of reprieve from the ugliness of the entire market. But then by Christmas, December 31st was a red day for the stock market last year. So we ended out the year really ugly, and it should have been like a 22% year. It ended up being only like a 17% year on the S&P. And so if these names do want to consolidate for the next few months and not just go up into the right like the whole market was doing back in September and October of last year, then maybe that happens. Broadcom right there, that's down 3% as well. Shark Ninja launches its first ever microwave that crisps like an air fryer. Okay, that's actually kind of interesting. If they combined an air fryer and a microwave together, yeah, that's the headline. That's actually kind of interesting. Stock should be up 20% on that, to be honest. Stock should be up 20% on that. BTC 64.4. That's better than AI, right? Dude, screw an LLM. That shit's an air frying microwave. Why do we need an LLM? Now, if they put an LLM inside of the air frying microwave, that would be something. It's going to buy it and cook a steak in it. Dude, air fried steak, you guys are sleeping on. There is a way to air fry a steak. You're sleeping on it, but there is indeed a way to do it. Rocket Lab back above 70. Back above 70 here. Tesla, how's that one doing? Is anyone buying the SpaceX dip? Tesla 392. SpaceX 136. I don't know if they let it go below 130, 135, but once again, so many shares still have to be unlocked. So many people still have to sell their shares. And I don't know if they're going to diamond hand after 15 years of not diamond handing it. So that's the only part that scares me. Waiting for 70, waiting for 80. Now, again, they're expected to grow EPS and revenue pretty nicely over the next few years, but is it worth $2 trillion is the broader question. SanDisk getting a little bit of a pump right here, 1450 to 1520. Oracle as well getting a pump. I mean, I'm not seeing new lows on most of the names we're looking at here. Robinhood 111 to 114. Look at that, pretty big candle. Even the quantum names getting some love. DRAM, that's up about 1%. Still down on the day. Netflix going to be a big earnings today. $3 away from losing the 70s, which if it dumps, I think it's going to dump badly. If it pumps, I think 80 to 82 is kind of the range where it goes to. I'm just so torn on this. I think it shouldn't go below 70 because I think the multiple is still relatively cheap for the, the value you're getting in this company. But I also am not optimistic on any of their growth initiatives. I mean, the fact that they're thinking of bringing live TV to Netflix when Netflix was supposed to be the antithesis. I can never say that word, dude. The antithesis. It was supposed to be antithetical to TV, That's quite incredible. Tesla right there, 392. That's down 0.5%. Do you have a position? No, I do not own Netflix. I do not. Never owned it. I think I owned it once, like 2 years ago. It was like a really quick trade. I've never actually held on to Netflix. I do feel though, like, if you were going to buy Netflix, like a 3-year low would be the time to buy it. But we're not seeing that yet. GE Vernova still down 1%. Mitt, do you think Micron's a good buy here? Let's ask the chat. I'm not in memory. I've not been in memory all year. I kind of am not really that excited to be in memory. When you buy at 850, it goes back to 1,000. It's like, cool. Is that really the reward for taking a chance on memory right here? It's going to 1,500, 1,800. It's a different question, but let's ask the chat. Are you buying MU here? Do I think it deserves to go up? Yes. Do I think it deserves to be closer to that 1,200, 1,500 range? Yes. Is the risk reward amazing here? I don't know. I also just think the cat's out of the bag, bro. Everyone knows this trade. I told you guys when I was in Singapore, the driver literally asked, should I sell Micron? That was at 1,100. And, you experience some of those moments and you're like, oh, everyone knows that this stock is out there and it exists. So where is the alpha in that name anymore? Unless the price just gets so egregious. Now, granted, the forward PE multiple on it is absolutely egregious. But any headline on memory shortage not existing, which, I think we're going to be in shortage for a long time, but the sentiment on that, I think, is the broader issue. Yeah, a lot of people have been saying there's a 750, 780 gap fill. A lot of people have been saying that, which I feel like would actually be a pretty decent risk reward if you get it in that level. But I don't know. Was it really the taxi driver? It was literally the taxi driver, dude. He literally said, should I sell my Micron? And me and my uncle were just like, holy crap. Like, it's everybody. Everybody knows this stock. I don't know if he did, but that was at 1,100, Doug says, Netflix has shown they don't know how to be a leader. They dominated stream wars, and they don't know what else to do to chase the growth that they experience from creating a new business model. Yeah, but I also think they're just saturated, right? Because they're in 300 million households. Like, it's hard to get incremental. That's why they don't report subscriber numbers anymore, because they know that there's not, that level of growth that they can impress Wall Street by. This is why advertising and engagement metrics are kind of their new way of impressing the street. I just think it's more fundamentally a problem with their content, dude. And I know people don't love this take, but if Netflix could make a Squid Games every year, they would be growing like crazy, because good content gets people to subscribe to a service because people want to watch it. But I think since Squid Games, they haven't had that international hit that is dominant. I mean, live sports is not it, dude. Like, live sports is a way to grow, but it is not penetrating the zeitgeist of culture and forcing people that never thought of buying a Netflix subscription to buy a Netflix subscription. That's what a Squid Games or a Stranger Things can do, and I just don't think they've really had that. Google 372 is that flip screen as well. Okay, what else do we have right here? Trump is, so I'm not going to be covering the speech tonight by Trump. Steve and I will be in New York, and we'll be recording Basis Points. So that'll be at 9 p.m. I'm sure the White House will be live with it. That's another thing I think the market's maybe a little worried about, that we've got this Trump speech coming up and no one knows what he's going to say. And if he ends up announcing stuff that's, you know, a bit more aggressive when it comes to the escalation of this war, maybe that's going to create some problems. But at 9 p.m., we're going to hear more from Trump. Here's an update on some of the stuff happening with the chips based on Melius research.
Like this on a macro level with the war, and that input costs could potentially spike up. The market may flock to safety, such as the hyperscalers traditionally have been at least an area of safety, and software has no inputs. It's vapor, it's downloaded. So, you know, you're seeing a little bit of that. Yesterday, some of the trading means a lot of computers are involved here, a lot of programs, and you could see like yesterday, like at 10:15, just a complete collapse. And some of this is really just a rotation. I believe it's temporary, hopefully. I really don't know what's going to happen with the war and some of those input costs, but I think when we get the hyperscaler CapEx news later this month, maybe we can start to kind of get back to normalcy, which I say kiddingly is semis and hardware leading the pack.
Input costs because of like what runs through the Strait of Hormuz, and that goes into the production of these chips?
I think that if oil prices go up, there's generally pressure on interest rates, and that also impacts some of the growth stocks I cover. But also, I think that there are some concerns about helium, LNG impacting electricity costs, et cetera. That
in Asia too,
and go through the chain. Yeah. So, you know, if you're a computer and you're looking for signals, I mean, this is a normal rotation. Software is no supply chain.
Or maybe these stocks just got too expensive, and then the reports came out, and it was like.
Well, here's the thing. I can assure you that when Micron went from 900 to 1,200 in 2 weeks in June, computers were involved. Okay, that wasn't just picking up every fundamental signal to say that's how much we should be up in 2 weeks, right? Okay. So now you're giving it back. Yeah. Now where are we?
I think that we're on the same trade. It's just a temporary pause. I mean, hopefully the macro works itself out, but just a few weeks ago we were on that path, and I don't think anything's really changed. I think when you see the fundamentals come out for the hyperscalers, you'll see CapEx increases, not decreases. And frankly, if anybody cuts CapEx, obviously that'll kill that trade. But I don't know what hyperscaler you're going to want that's giving up on AI. So I don't think they're going to do that. I think Meta, I think Google, I think Microsoft all raise CapEx.
For next year, for
next year, maybe the rest of the.
You know, it's interesting because Melius gave Micron a $2,200 price target. I don't know about you guys, but you can tell in the guy's voice he's not as enthusiastic about that price target right now. And number two, listen to what he just said. If any of the hyperscalers even think of cutting CapEx, that trade is dead. Which, again, I don't think any of the hyperscalers are going to be cutting CapEx. But the fact that many of these stocks are literally contingent on the whims of Zuckerberg, Nadella, Sundar, and Jassy, like, sure, and those stocks have done really well, but if that changes even a little bit, it starts to disrupt the thesis of that trade, which doesn't mean that trade is over, but it obviously creates what we've been talking about for the past week, a sentiment shift. And, you know, you live and die with the sentiment right now. So ultimately, it's going to come down to those earnings. I think they're all going to increase CapEx, but how much reward is in the risk of taking a chance on these names based on the sentiment of the hyperscalers? Is it 30%, 40%, 50%? Because if it's 10, 20%, is that worth the risk right now?
This year, but the signals for next year, calendar year, have to be higher.
Your note on IBM was an amazing read, mostly because you said it stung, the quarter stung, and that they didn't telegraph any of this to you after multiple meetings.
How dare they?
Are you mad?
Am I mad? You know, in this business, you get humbled all the time, you know, and you try to have conviction and try to be humble with that, which I have trouble with. So I think that.
But I just based on my understanding of what happened here after talking to Arvind, it sounds like it only in the last few weeks of the quarter did they have this pause on CapEx orders from a few customers.
I think it was literally the last few days.
Right. Isn't that how software is sold? I mean, that's the issue. Like, that's literally every software company every quarter, the final week is like, do we make it or not?
What was so interesting, I mean, about IBM is they were so bullish during the quarter. It actually seemed like fundamentals getting better all throughout May. And then to have this happen, I mean, obviously, tons of sell side and investors got burned, or else it wouldn't have gone down 25%. It's continuing to go down. They really need to step up this quarter call next week. That's what I mean, on the conference call. And they need to basically say, look, our organic software is like 1%. We got to see it going back towards double digits or, you know, higher single digits. And here's the path. And it has to be credible or the stock continues going down, period. And I think that what was to turn it into a positive is the release. And then I spoke to the company, of course, and it really read as like an advertisement. I know the stock's down for Dell. It was like x86 storage, you know, all the stuff in my hardware trade is awesome. I know the stock's been down since because of whatever's going on, but if we were in a perfect world, you'd be buying Dell with both hands. And I'll tell you, I think it's positive for Cisco too, because I think people are realizing that old server and switches are a walking, talking vulnerability to be hacked. And you got to get the new hardware to run the new patches and the new software. And that's crowding out stuff like mainframes and stuff you just don't need to pay attention to. And something's got to give. We wouldn't be surprised if SaaS bookings towards the end of the quarter also got wrapped up in what IBM saw. So,
well, those stocks did get hit on the knee-jerk reaction.
Now they're coming back a little bit. They're down a lot. So we'll see what happens.
I guess the other piece of it, and maybe people are kind of going a couple of steps down the line on this, is when it comes to the Dells, that if the second quarter represented a bit of a pull forward because everybody was desperate to get this stuff in the door, maybe that's why Dell's traded off since the IBM warning.
Yeah, I mean, that sometimes happens, and people ask me that, but I'll tell you this, that there is a fundamental rush to buy new servers. So you're not only Mythos safe, you're quantum safe, and then they have the best allocations from Jensen. So, I mean, who cares if I'm pulling forward? Then by August, I got Vera CPU racks, best allocation. I mean, we're talking billions upon billions of revenue, not just a little tiny, smidgen of it. And we got Vera Rubin, and they got the best allocation. They're the most reputable company for neoclouds. I mean, Supermicro has obviously got Supermicro issues.
Yeah.
So look, there's definitely a pull forward of some stuff, but then it hands off to Vera Rubin. It's a pretty decent setup for good old Dell. Well, for Dell, and for some of the hardware guys will be catalyzed by that as well. Even
maybe that's what we need, man. Maybe he's right. Maybe the Mag 7 initiating projections for CapEx. SK Hynix still down 8% right there. SanDisk flipping from 1530 back down to below 1500 is what you need for the trade to come back. Which, again, every projection says that the Mag 7, I mean, Google diluted by 85 billion for a reason, right? They're going to be spending it on CapEx. So I don't think there's anyone who actually thinks the Mag 7 won't be spending more on CapEx. But the fact that the trade has evolved into literally just relying on the Mag 7 to spend on CapEx, which affects NVIDIA too. I mean, NVIDIA is part of that trade, right? If the Mag 7 stop their CapEx there, that ends up hurting NVIDIA. But if that hurts NVIDIA, if that hurts Micron, if that hurts the entire AI trade, then, this stock market is held up by everything else besides the semis, which begs the question, when the dot-com bubble burst, the entire stock market collapsed. If the semis go away, does the entire market collapse, or do a lot of the names that have nothing to do with CapEx just continue to progress? And it feels like that's where the sentiment has shifted to today, even if all indications are that CapEx continues to be as strong as it possibly can be. Where is CoreWeave right here? That stock down 4%. S&P 500 almost green. So S&P doing a nice little V-shape right there, at least to an extent. Going to earnings and not being all-time high can be really good for us. Yes, that is actually very true. That's a great point that we all should remember. Like, Nebius going into earnings at 290 is probably more bearish than Nebius taking a 30%, 40% drop going into earnings, because then all good news is potentially upside. Now, the problem is TSM, ASML are starting off earnings in a bad way, at least based on their stock movement versus their earnings. So it begs the question, if Nebius, CoreWeave have really good earnings, are these things going to just go down even further? But if they were at all-time highs, it'd be more likely for them to go down versus if they've already taken a bit of a beating. Rocket Lab right there, still below 70, as that's down 8%. EOSC did win a Golden Dome energy storage contract yesterday after hours. That stock Wow. Even after that, down 4%. It got up to 525, now at 418. So good for the long-term growth prospects of VOC, but obviously momentum in a drawdown right here is getting hit. Meta rebounding. This was at 665 on the dot 20 minutes ago, right back up to 678 as Meta's getting a lot more momentum. All right, let's bring on someone to the show, folks. It is Thursday. Let's get their take on what they think is going on in the world of semis. Ladies and gentlemen, Mr. Jose.
Good morning, man. How's it going?
Good, man. How are you?
Pretty good. Portfolio not so good, but overall I think doing pretty well.
Let's get started. I'm just going to give you the floor. What do you think is going on with semi sentiment, and do you think this is a bit more temporary than not?
Yeah, I mean, the sentiment. I mean, there's been so many. We were talking about it last week. So many kind of scary stuff being thrown in the AI semiconductor cycle. But TSMC and ASML reported earnings, and to me, the only thing that I can think of is the market is stupid. And obviously, the market's not stupid. The market is right for its own directions, but for its own reasons. But based on what we heard from TSM, and maybe we can even deep dive on it, not just like on numbers. I'm huge into reading the transcripts, hearing what management is saying, and kind of giving us the little gems there. I think that's where a lot of things are found. And the things that I heard from ASML and TSMC for me were extremely exciting. I don't know if we want to jump into them.
Yeah, let's start off with that. So I'll give you the floor. TSMC and ASML. Let's start with TSM. What did you hear outside of the numbers that is giving you a different perspective on this AI tree?
Yeah, so first, TSM and ASML, these are two people that have been in this market for a very long time. They've had a lot of these cycles in the semiconductor industry. They've been the ones that have gotten beaten down. So I do believe there's a lot of trauma. And I don't know if trauma is the right word to say, but they have trauma of the semiconductor cycle. And with that trauma, it provides a form of hesitation for them to go all out. And I still see that hesitation. And I believe that hesitation is actually extremely strong because it provides, if we are, for example, in a cycle, obviously a cycle, it makes the cycle last longer. Because TSMC is not one that's going to build a bazillion fabs just because it says, I need more demand. They actually talked about that during the earnings call today. They mentioned that, yes, all the CEOs are obviously coming to me and saying, we need so much demand. Can you build more and more capacity? And TSMC says, we're going to listen to them. But at the end of the day, that is the goal of these CEOs, to be very exaggerative, to be very kind of bullish on their market. It is my job in a business to go out and verify this. And how is TSMC verifying this? They mentioned that now they have a unit that is tracking data center buildouts, that is tracking all of these kind of AI evolvements, so then they can make sure that the chips that they are building are actually being used and not just sitting in a form of inventory. So when I hear TSMC say that they're keeping kind of that they're keeping track of all this data center and they're feeling confident of increasing capex by an extra $10 billion, which I believe they did on the top end, it tells me that this cycle is still extremely early. The other thing that they mentioned today was the biggest bottleneck for the industry right now is advanced packaging. And that, because of advanced packaging, it sometimes it creates a slowdown on their wafer revenue system. They even welcome Intel, right? They mentioned that Intel is providing advanced packaging solutions, and they say we actually welcome them because if they can help us build, if there's another opportunity for more advanced packaging, it's going to allow us to sell more front-end wafers as well. So for you to be saying that you welcome a competitor in this market right now tells me how constrained we are in this space. Because if there was a market where you were only undersupplying by like 10% or such a small number, you wouldn't want another competitor come in. But if the gap between supply and demand is so crazy, it does tell me that welcoming another competitor means that it really won't affect you in the long term right now. So TSMC kind of gave that clarity today. And then ASML yesterday, they mentioned that They're increasing capacity by 30% in 2027 and 2028. And even with that, they're still being a bit hesitant on how much facilities they are expanding on capacity, because these two players, like I mentioned, they have a lot of trauma, and I like that they have trauma because it prevents them from doing what other companies do and just overbuild, and then we have kind of an oversupply issue. These are the two people that are working on are the actual bottlenecks, and for them to stay again with that trauma, it keeps me excited that this cycle is going to last a lot longer.
Okay, so the interesting thing there that you said about these two companies is that it's not just the numbers, but the indication of what the numbers are implying for a future trajectory of growth means that the cycle is going to last longer. Why do you think then that the market is having this visceral tone? Like, because those numbers, as you said, were incredible. The capex build out and the gross margin build out, or gross margin increases, I thought was also incredible. But the market's also it's almost pricing Micron as if we've seen the top. And maybe that's memory specific, but that's bleeding into the other sectors. So why do you think ASML and TSM are not enough to kind of convince? Because these are the large cap semis that this is going to continue a lot longer than we think.
Why do I think these indications are not enough? I can't say
like the TSM need to grow like 80% instead of 45% to get the, you know, like
I don't know if the market wants it's funny because it feels like the market wants TSM to grow so much faster, but for them to grow so much faster, then you accelerate the overbuild out. But then at the same time, the market doesn't want an overbuild out because then you have this cycle. So I don't know. I don't know why the market. I mean, right now, all eyes are in like memory, right? We just had the SK Hynix, not IPO, but available here in the United States. You're seeing so much discussions of long-term agreements in the memory space. I can't say I can give you an answer on this one. I don't know. I really don't know why the market sees this, especially when companies like even the big boys, Broadcom trading at a forward PE ratio of like mid-20s, NVIDIA trading at low 20s, TSM low 20s. At least these players don't show kind of a scariness in valuation. I think the market is really just doubting that there is anything outside of this. Like, this is the peak. And I just don't see that happening. I don't think that is the peak. And that's the only thing, is the market doesn't believe that. The market believes this is the peak. This is as good as it gets. And I don't think it's as good as it gets.
And the earnings from ASML and TSM don't give you any indication that even in 2-3 years, this is over.
Yeah, I mean, if ASML is telling me that their order log is filled for 2027, and it's not filled for 2028 yet, but they're already kind of in discussions for 2028. These companies that are buying this equipment, TSM is saying that in 2028, I still need equipment, and I need this equipment to last me till 2033 to 2034. Obviously, that's very far looking, but it gives you at least an indication that the market that these players that are buying this equipment, it believes the demand is going to stay to at least 2030. Because if not, they wouldn't be ordering in 2028, right? They would just be happy with what they have in 2027 and 2026. So ASML's indication as well with that inventory and their backlog, based on the commentary that they shared, I think is a good indication of what we're seeing with the big players.
Okay, the neoclouds. Why do you think the CoreWeaves and Nebius of the world are getting hit here?
This one, I mean, you have all these bearish sentiments. I mean, obviously you have a lot of more open source models coming out, Chinese models that are coming out at token cost a lot lower. You also have the kind of negative pushback from the New York governor, from New York State. I don't know exactly from where it came, but from New York State about a pause. And it's like the market is fearing, does this create an opportunity for other states to follow suit? There's plenty of states and plenty of opportunities out there, and I don't think many data centers are actually in New York. I think most of them are in Texas and in the Midwest in the United States. But kind of that question of what happens when new states come out? What happens if these tokens get cheaper and cheaper? Is creating this fear for your CoreWeaves, for your IREN, for your Nebius. And you also saw Nebius yesterday announce kind of a new project where they're a new building model where they're kind of more like rent out their expertise and do kind of like a revenue sharing stuff. And I wonder if the market is saying, maybe Nebius is now, and I don't think this is the case, but I feel like bears can easily go. I wonder if Nebius is getting scared of building out their own AI infrastructure. So instead they want to reduce their AI capex. They want to reduce their potential expenses and try to find a lighter weight model, which is the business model that they described. I think it's more of an and an additive that Nebius is doing, but I think the market can easily kind of turn it around. But here is where you have to be a bull and decide, what do you think is going to happen faster? Do you think the optimization of tokens and the cost of tokens is going to be faster than the rate of token growth? If you think that optimization is faster than the growth of rate, then you're right to be a bear. If you think that, well, yes, for example, I believe optimization and all these things are going to happen, I just believe the growth rate of tokens is going to be more to surpass that optimization, and that's why I'm bullish in the AI cloud space, because I believe this growth rate of token is going to far outpass the actual optimizations. But again, this is where you have to pick a side.
How do you feel about the Chinese open source models? I feel like this news might be going under the radar that there's a company in China only worth 30 billion, potentially Opus 4.8 type of model that it's as good as, still not as good as Fable 5. And Anthropic's going to go public at 2 trillion. Like, are we crazy for giving these foundation models these multi-trillion-dollar valuations when, yes, their growth is good right now? No one's denying Anthropic's growth right now. But I mean, if the other models just take away their margin, like Meta's doing with Muse Spark, that growth has got to slow down at some point, which means 2 trillion would be kind of crazy. And do you think the market's kind of thinking that CapEx build out and RPO coming from Anthropic and OpenAI is going to have to die down, which could also be affecting the picks and shovels play?
Yeah, definitely. I mean, these AI models, right? If you have this fear of, hey, if we can do it cheaper, does that mean that the AI build out slows down? Yes, 100%. This creates that fear, and I think this is where you get either. I see some people in chat. It's either a gamble, right? I mean, you get an outsized return or outsized loss, or you get a crazy loss. I really do believe that even with these improvements in cheaper models, the demand for tokens is still going to skyrocket. There's also a big difference between smart tokens and cheaper tokens in forms of how quickly they can complete a task, how much how much a human needs to intervene to complete that task. And the one that can do it the easiest, the fastest, does deserve a premium. But it doesn't mean I'm right. It's just that's the side I pick. And I believe bears are right to have the side that they believe that token cost reduction is a big bearish thesis for the AI story.
So overall, you're not sipping the Kool-Aid around the bearish sentiment, but you understand why it's happening, basically.
Yeah, 100%. I feel like that's why I'm extremely comfortable with owning this. I feel I can talk to a bear and understand where they're coming from. But like I mentioned, just to kind of even going from AI, coming back into the semiconductor industry, these two players, ASML and TSM, are really big players that dictate how this semiconductor cycle is going to last. And from what they're saying and the control that they have, thanks to the trauma that they've experienced, I believe allows me to feel more comfortable with this cycle. If it was other companies that they are just extremely greedy, and another reason that I don't think they're that greedy is while they are increasing their pricing on machines and they're increasing their pricing on kind of the manufacturing side, it's not like the type of increasing we're seeing in other parts of the market. Like some other parts of the market might be a little bit more greedy. And when you're a lot more greedy, I do believe it creates more FOMO as well. I think these companies are doing the perfect amount of rise prices and they have the right amount of trauma to be able to help me feel very comfortable for the space.
Micron, Does it make sense for this to be taking the hit that it's taking, along with SanDisk and the other memory names?
I don't think so. I mean, you guys know I don't own these memory players. I don't own directly the memory players, but I don't think the memory story is over. I mean, especially now that you're making these long-term contracts, the margin story, right? The margin stories are expected to be much higher than they were in previous bear cycles. Today, I think we saw Micron announce more long-term contracts with automotive players. I'm pretty sure they have many. They have many contracts with other big players as well. I do believe that changes their valuation, what they should be valued at. The question for me is, where is it? And I don't know if I can guess that appropriately. Regardless, this is still going to be volatile, but the memory market is definitely not over, especially if you are a big believer of like robotics and more AI push. Like there's so many places where memory is going to be crucial. IoT, AR, VR, if you're still into that as well. Like there's so many autonomous driving, like I mentioned, robotics for consumers, for industrial. The list goes on and on. The demand is definitely there, and the opportunity, especially since they're going to take some time to build out fabs.
Christopher Patel asking, do you like Intel, and do you think they will be seen as another TSMC eventually in America?
Yeah. So I mean, he even brought it down here where Google's is shifting their packaging to EMIB. So this is exactly what what TSMC was just talking about, that they welcome Intel right now. Intel, in previous earnings, they thought advanced packaging was going to be a few $100 million business. I think in their last earnings, they mentioned that this is actually north of billions of dollars of opportunity for them. So this is a huge push for them. TSMC today mentioned that advanced packaging continues to be a very constrained space, and they actually welcome Intel to be a player here because it allows them to make more front-end wafers. And then if they sell more front-end wafers, they can either go to TSMC for advanced packaging, or if they're so constrained, they say, go ahead, go to Intel and kind of do the advanced packaging there. So right now, it seems like even TSMC is welcoming the competition because the gap of supply and demand is that crazy. And I believe that could be very bullish for Intel.
Jose's Twitter, I'm putting in the chat. Everyone make sure to give Mr. Jose a follow along with his YouTube and a newsletter, What the Chip Happened. I will link that right here in the chat. If anyone has any tickers in the semi space, we'll do some rapid fire with Jose, and we can get his perspective on that. Jose, before we get into that, and there's a newsletter right there, the New York moratorium on data centers in general, as a semiconductor bull, I would imagine you're not the happiest about that, or you kind of understand that political backlash.
I'm not happy about it. I understand the public backlash. I mean, I think there's a lot of data that showcase that data centers are good for starting new jobs, for getting money for the cities or the states. We actually seen plenty of studies that showcase, and obviously studies and numbers can be played both ways, but there's studies that show that data centers aren't really the ones increasing the pricing. It has to do more with kind of other political stuff, but it's an easy way out for politicians in theory. Everything, if you can make an easy way out and do it, a lot of people are gonna talk about it. I'm not happy about it, but the great thing is we have 50 states in the United States, and each of them kind of have their own set of rules, right? And I think places like Texas are going to continue to welcome, and in the Midwest are going to continue to welcome data centers, as they are going to see it is a big portion of revenue. It's going to help with taxes. It's going to help with starting jobs. So overall, that's good. But I do understand the bearish thesis. If in theory, though, also I want to talk, if there is a slowdown in data center build-outs, it does become bullish for companies that do have a lot of capacity, right? Because if data center compute becomes even more of a constraint, the GPU per hour should theoretically go higher because now you have more people. So I always try to find the opposite angle of it. Maybe some people might call me too much of a perma-bull, but I just try to find the other way of how it can be somewhat, at least not that bearish for the industry.
Okay, let's get started with some tickers. So your raw thoughts on any of them based on what you're seeing. Let's start off with NVIDIA.
And extremely bullish. I mean, it's Vera Rubin's coming out. The market's scared. They're going to showcase some crazy guidance again. They're going to beat revenue. I'm excited for NVIDIA.
Do you see 250 end of year on NVIDIA?
Do I yes, I close my eyes and I see it. Perfect. Perfect. I see it and I see me jumping of excitement. But yeah, I think this company is also going to give a lot of money back to shareholders with the amount of free cash flow they're coming in. They're going to do the massive amount of buybacks and the dividends. I think is going to increase dramatically as well, while growing at crazy levels. So it's not like they're going as a dividend player, but now I'm a dividend investor.
Amcor,
I mean, with the advanced packaging that we're hearing from and kind of the constraints we're hearing from TSMC, I don't follow this company too well, but I would say on the top level, TSMC mentioned advanced packaging is extremely constrained. That should be very bullish for Amcor. And then we have kind of obviously the increasing CapEx. So they're probably going to help Amcor build their capacity. What we heard from TSMC, I believe, could be bullish for Amcor.
Oracle.
Oracle, I mean, people hate it. It's at 126. I mean, it's a massive AI compute. If you believe the AI compute story is extremely short, it is extremely constrained, I like Oracle at these levels. I like a lot of neoclouds at these levels. All neoclouds I like at these levels right now.
Yeah, so Nebius, Corey, Viren, use same.
Yeah. If it will be the same thesis for all of them. It's just compute is a bottleneck, and these companies are going to do well with the amount of backlog. I think we're going to continue to see increase.
Navitas.
I mean, they've been definitely punished because there's been the delay rumors of like the 800, some delay rumors on power stuff. This is one that I have to check when their big catalyst is in forms of products, if they're more of a press release story still just yet. Excuse me. So not too familiar. If I was an investor, what I would check is when is the real revenue coming for this, and am I prepared for that? Because we know that the 800-volt solutions is pretty big for them.
KLAC.
Clack. I mean, Clack is very important for yield improvements. And if you can't build enough chips, if you have a supply constraint in the actual manufacturing, the only next best step is to increase yields. So Clack is going to do really good. Semiconductor equipment, I mean, we just got it from TSMC. They increased CapEx by an extra $10 billion on the top end. I think the semiconductor equipment cycle is here to last. But in the equipment play, I really like anything below $10 billion in market cap. Those are the ones I'm really kind of keeping a closer eye on. I think Clack is closer to 70. What's the market cap here?
290 billion. Clack.
290, over 100. Yeah, so it's typically one I would stay away just because of pure size.
AMD.
Oh, man, I'm excited for, 4 days from now? If they need to showcase a big AI customer on that AI event next week. I think it's next week. If they don't, I do believe the stock price could get hit. Something like Anthropic or your Google or Amazon. Something big needs to be announced for them on next week.
Lam Research.
Lam Research, semiconductor equipment player, very crucial for the memory space. We're seeing memory built out. A lot of memory companies have run, a lot of equipment companies have run up, very similar to Clack, where mainly more of a pure size, I would stay away. But what we're hearing from CapEx is this is going to continue to increase and do really well for equipment players.
Light and Coherent, these photonics names, Air Test Systems really crushed it. I would imagine you think the optics story isn't over yet.
No, definitely not. It's getting started. I've done a bit of research. One thing I do enjoy Light the most at the moment. Just because it does seem like it has the full stack. It has a full stack solution, but I'm not buying any optics names right now. Let me just tell you, I'm purely in neocloud markets right now. That's the real play I'm in right now.
So the reason your core allocation is that part of the stack is because you think the backlog is what makes it juicy enough to bet on the guaranteed revenue growth, essentially, right?
Yes. And I believe AI is going to continue to move that no matter where, and to me, it's like, no matter what chip design we're going to go with, if it's going to be copper, if it's going to be optics, no matter what memory system we're going to go with, is it going to be HBM? Is it going to be DRAM? Is it going to be SRAM? No matter where it goes, at the end of the day, it's going to run on some form of compute, and that compute is going to be run on NeoCloud. So to me, it eliminates a lot of the questions. And it's like, this is the end goal, so why not just go in the end post? That doesn't mean I'm bearish. It's just I feel like I have to do less thinking, which is great for me.
That's actually a great point. I never thought of it like that. No matter what layer of the stack is used or not used, or optimized or not optimized, it all comes back to the data center, which is what the NeoClouds are essentially trying to get through into the world. Broadcom.
Oh, I used to be a Broadcom hater. I think 2 quarters ago I changed it. If I didn't have such a massive size on NVIDIA, small flex, I would be buying Broadcom. They have, I mean, I think the ASIC market is strong, and they have a great team. You have a lot of bearish thoughts of the market leaving or finding other players like MediaTek or other names. Broadcom, I think, has a great customer backlog.
Qualcomm, after that investor event?
Qualcomm is one of the few one of the big players that started investing in recently. I think the CPU story is getting strong here. Their partnership, they have announced a partnership with Microsoft and Meta. Even though they're far off away, I don't mind trying Qualcomm right here, because then they also have the opportunity of Internet of Edge and edge devices. It might be a boring play for the next few weeks, but for the next few quarters, but I like it right now.
Marvell.
I mean, you guys know I own it. I'm not buying. I just think it's overstretched. The bullish case is still there, so I'm not selling. Under 200 though now, right now. I have to maybe rethink what I just said. Still not as crazy as some of the other opportunities. Yeah, so high growth, high risk. I'm not purchasing right now. Maybe not top of my watch list.
Okay, last one for you. I think you'll have the same take as Micron, but SK Hynix.
Yeah, I mean, if I was to go into the memory space, I think I would jump into Micron over anything. US based, a lot of contracts, very easy to follow and see how that thing is moving. Long-term agreements. It's just easier for me. I think I would prefer Micron over some of these names.
All right, Mr. Jose, thank you for taking the time every Thursday to help explain to us what's going on with the semis. Jose's Twitter is right there. You can follow him there. We will talk to you again next week. And yeah, dude, I think your insights are really, really valuable on a day where obviously we're having a drawdown, but also this whole month has been pretty ugly for the semis.
Yeah. So. Yeah, I mean, like I said, when I start to talk about semis, like I lock down and I just start thinking. But if there's one crazy thing I would say before I head out, is the market is stupid. I think semiconductors are going to continue to rally, and I'm super excited. Obviously, stock prices suck right now, but hey, that's the game.
Love it, Jose. Thank you.
Peace out, man.
Right, that was Mr. Jose giving his take. I think his NeoCloud take was actually really interesting. Like buying the separate parts of the stack, whether it's optics, memory, wafers, etc., ultimately comes down to Nebius, CoreWeave, and those guys getting more backlog, right? Now, there might be different levels of alpha within the stack, but the backlog itself is still going back to the broader NeoClouds. As semis continue to just puke today, guys. NVIDIA hitting the lows of the day, 206.27. We had a little bit of a bounce about 20 minutes ago. That bounce has been completely erased. Micron, 862. Lumentum, 719. You got Nebius, which I guess that had a little bounce up from 182, but now 184. Obviously lost the 190s from yesterday. It actually hit 201 yesterday after hours, and well below that now at this point. ASTS continues to get hit, down 14%. SpaceX finally losing 135 again and flipping red on the day, as Rocket Lab also having a pretty ugly day, down about 10%. ASML did flip green, which is good based on the earnings they had yesterday. TSM also was down 5%. Now it's only down 1%. So this one has had a little bit of a comeback from the $400 range in the pre-market. But obviously still pretty red across the board. Let's take a listen to the ex-Salesforce CEO who has a new AI company that's automating call centers. He's also the chairman of OpenAI, Brett Taylor, and see what his take is right now on the state of AI.
Type of things. I wonder the impact that you're seeing on an IBM, for example. Worst day for that stock in history, really. Are you seeing some of the changes in how things are built, how enterprises are spending, start to impact the legacy players? What does it say about sort of where we are in the cycle right now?
There's a ton of uncertainty right now. You know, I love the CEO of IBM. I believe in that company, but I think the market right now, there's almost contradictions. You have all this excitement about AI and token maxing, and the CFO has said, who the heck's buying all these tokens? You know, what's going on with our token bill? And then on the other hand, you have a lot of people saying, where's the value from this AI? You know, the approach that we at Sierra and others are taking, I think, is roughly the answer. And I don't mean that in a self-serving way, which is, you know, with a Sierra agent, you're not paying for tokens. You're paying for business outcomes delivered. You're paying for that appointment being booked. At Sierra, as an applied AI company, it's our job to worry about the tokenomics. You know, we're doing it on your behalf. My view of the AI market right now is there's just not a mature enough applied AI market. So as a consequence, every company in the world is trying to figure out, you know, what's the best token for the job, the most price-effective token for the job. It would be like if you had to, you know, build the engine of your car to get into the office every day. It's just crazy that every company has to bear that burden individually. I think we're going to move to a world of paying for outcomes, that companies like Sierra will make solutions and platforms that deliver those outcomes. And you'll have a few companies that get really good at this tokenomics that can bear that burden on behalf of companies around the world.
I would think that would instill fear in a lot of software companies. If they're used to the subscription model, if we are starting to pay for outcomes, that might be a longer conversation. I do wonder, we mentioned token maxing. Where are we in the budget conversation? When you talk to CFOs and CEOs, have they figured that out? And are they actually choosing the cheaper models? What does it sound like on the ground for you?
Well, I think it was such a funny, I think when we were here last time, we were just talking about this. Yeah. I was here, a few months ago, and it was a totally different discussion. Now I think everyone is talking about what is the value for these tokens. I think it's why actually OpenAI's GPT-5.6 launch, I think, was so exciting for the market, because it wasn't just that it was a very high quality model. Per dollar, it was an exceptional model. And I think companies like OpenAI, it's about, do we have the right token for the right price for the job? And it doesn't mean you always need the highest parameter count, most intelligent model. It's really a spectrum of options, so you can actually pick the right tool for the job. The answer, are people doing that yet? They want to. But as I said, it's hard. You know, it's hard to actually sort of route the right job to the right model. And I think there's a lot of, as an entrepreneur, I think there's businesses to be made to help companies optimize their token spend. But I think in particular for companies like OpenAI, it's important that there's a wide spectrum of products available. So it's not all the most expensive models, but a wide spectrum for every industrial application.
Sarah's got a question for you.
Well, it's on that. Hi, Brett. It's Sarah. It's good to see you. As chairs of OpenAI, what does it mean for the business if the token prices go down drastically?
This is a good question. Let's see what he says.
Especially, you know, if you're competing with Chinese tokens, which are much cheaper.
You know, look, at OpenAI, we have a really clear goal. We want to have the right price point for every single application. You know, I think if you look at some of our lower parameter count models on the GPT-5.6 lineage, they're competitive with open source prices. So, you know, look, I think competition is always good. I'm a capitalist. And, you know, at OpenAI, we don't think you should have to choose between finding something that is cost effective and having the best models built here in the United States. And that's really our strategy as we build out our portfolio of models.
That didn't answer the question. That did not answer the question. Her question is, how do you guys stay relevant if the other guys have cheaper tokens? His response is, we have cheap tokens too. Well, the obvious question then is, how do you guys make a profit? Like, saying you're a capitalist doesn't answer the question, buddy. I don't know. That was not an answer. And I think it's because, quite frankly, no one has the answer right now. But that was not an answer to what she's trying to say.
And Brad, it's Mike here. Kind of along those lines, there's the cost piece of it, and then there are the issues that were highlighted by Satya Nadella this week about how companies, may not want to help train and give away their data to the bigger models, may want to have boundaries around that. How does that fit into, I guess, both the Frontier Labs strategy and growth, and then, the opportunities on the software side where you're also playing?
Yeah, I'll speak to both, but actually I'll start with Sierra because it's something we think a lot about, which is, let's say you build one of these agents that can, help with prior authorization for a healthcare procedure or originate a loan. What data is yours? And our answer is all of it should be yours. And what's exciting about agents built on platforms like Horizon, every time your agent makes a sale or accomplishes a task, it learns how to do it better the next time. And so this durable asset, which is the relationships you have with the customer and the memories of your previous customer interactions, become this compounding asset that's your moat for your business that's uniquely yours. It doesn't go to the model makers. It doesn't go to your competitors. And our view is this is how businesses really need to think about their place in AI. The AI itself will become more commoditized over time, right? Everyone has access to the same models. What do you have? You have your relationships with your customers, and you have the memory of all those interactions that make your business and your relationship with your customers unique. And I think companies will get much more sophisticated about thinking about.
He's just restating what Alex Karp said. I mean, at this point, I think OpenAI is just adopting Karp's narrative because, like the whole narrative around data sovereignty, because they don't actually have an answer for it. But the problem is they've been stealing IP. They literally just got accused of Apple by stealing IP. So now he's saying, yes, your data is yours. But that's not really what's practically happening right now in these enterprises.
How to build those moats and how those moats sort of compound as intelligence improves. I think it's a very, very important conversation, though, because every CEO that I talk to is asking, how do I differentiate myself when there's a super intelligence that I and all of our competitors have access to? And I think the answer is in your customer relationships.
This is the problem here. This is the fundamental problem, right? Like, if their models get as cheap as the open source models, this is the point that Karp has been making and that a lot of people have been making that is now starting to come a little bit more to fruition in terms of how people are thinking of AI about commodities. Commodities don't get margins. They are a race to the bottom. There is a reason Micron has never been $1 trillion company until this year. Now that there is a supply-demand imbalance that allows there to not be a race to the bottom and have 86% gross margins. There's a reason why a lot of the gas companies, oil companies, they compete with each other and there's relatively the same price per barrel of oil and there's not too much discrepancy. If the models end up becoming the same price, competitive with the other international models that are just as cheap, then where does their margin come from? How does OpenAI make money if they can't make money off the token API generation? Now, you have two scenarios. One is the hardware devices, which I'm not a believer in, but let's say that ends up working out, which is why I think they're getting into hardware. But number two is the implementation of their API, aka the software stack, which is why OpenAI and Anthropic have been building these forward deployed engineer companies where they're trying to own the application layer along with the token layer, because there's a lot more margin, obviously, in the application. ServiceNow, Palantir, Salesforce, et cetera, that have locked in these customers for so many years to be able to give up their data. But the problem is, I think a lot of enterprises don't want to give up their data to Anthropic and OpenAI, and they don't really trust that they have the best intentions with their run-of-the-mill applications that they created overnight versus a Salesforce, a Palantir, a ServiceNow, all these larger software companies, a CrowdStrike that they've had their data with for a long time. So if the tokens aren't making money, or it's kind of obvious the tokens are not actually going to make money, if Zuckerberg is out there slashing your token cost by 90%, then how do you make money? How do you justify $1 trillion valuation? Yeah, it's super bullish software. It's actually super bullish the semiconductor stack too, because the open source revolution isn't bad for the semis. It's not bad for NVIDIA. It still means you need a ton of compute, as Jose was saying, but it is bad for the foundation model companies that, yes, have crazy growth right now, but that growth might get stunted if that growth ends up going to Meta and to open source models and Kimi K3 from China. Now, the part where it affects the semi stack, from my understanding, is that OpenAI and Anthropic are half of the RPO for all the hyperscalers. And quite frankly, for a lot of the data center companies, like an Oracle, where OpenAI is like 50% of their RPO. So if OpenAI and Anthropic can't create meaningful, profitable, long-term growth does that affect the spending commitments that they have? Which is why, you know, it doesn't make me happy to say that OpenAI is struggling here when it comes to having a story for their company to succeed, because OpenAI failing is like really bearish, I feel like, for the broader market, even if OpenAI is not a public company. 679 right there on Meta. So again, I don't think it's an end all be all that OpenAI and Anthropic are screwed or anything like that. Obviously, their growth is still phenomenal. They're still going to be able to IPO. The problem here is that if we look out a couple of years and the price of a token is decreasing 90% every year, and there's so many more players that are offering those tokens, and there's this whole push for data sovereignty, then the frontier labs should not have a duopoly on token generation, which means, A, what is the terminal value of those businesses if they don't get into hardware or they don't own the software stack in terms of the relationship they have with their customer? And then B, how much more better can the models get? Because if they keep getting better, but they also keep getting distilled and copied, and you know, Fable 5 is just not that much better than the latest open source model, then it really freaking begs the question around growth prospects around the frontier model companies, which is why I think this semiconductor sell-off has been so extreme. It's literally been that entire thesis right there. And the OpenAI chairman on CNBC right now did not massage any fears away. If anything, he only exacerbated them, because it didn't seem like he had an answer to those questions. Rock Lab right there, that is still down 10%. As that is down. So we're going to see, if anything, this should still be bullish for the hyperscalers as they continue to win regardless of the model. Same thing with the software companies, which is why it's kind of surprising that software stocks are taking a little bit of a hit. But it's OpenAI and Anthropic that I think are kind of spicing up the market right now. Microsoft at 397 here. NVIDIA still taking a hit as that one comes down 206. That's down 3%. Again, NVIDIA should still do fine, even if Anthropic and OpenAI don't do fine. This is a problem that's rooted in, I mean, I think this is why Jensen partnered with Palantir, and Jensen's being so bullish on open source right now. I think Jensen is, I had this theory 2 weeks ago, and I think this theory is, I think Jensen is pissed that Anthropic, OpenAI, and all of his competitors have started to build their own chips. Anthropic has custom silicon they're building with, they're getting long-term commitments with Micron to build their own chips with Broadcom. Cerebras is partnering with OpenAI. And I think Jensen's just like, all right, if you guys are going to compete with me in the chip game, I'm going to compete with you in the model game. And it's really hard to make a chip. It's actually a lot easier to make a model. And if we make competitive models to you guys, we're still going to win, because everyone still needs to buy Vera Rubin, but everyone does not need to sign up for an OpenAI API. And I think that's also been a bit of the back and forth here between NVIDIA and some of these model companies as well.
Taiwan Semi actually delivered one of their strongest quarters ever. Record revenue, profit up sharply. And yet the stock was down worse this morning, but now it's down 1.5%. The problem is TSMC's margins actually beat its own guidance, but some on Wall Street had quietly kind of penciled in an even higher number, buy-side numbers. And when a company this dominant only meets expectations instead of crushing them, investors, unfortunately, use this as a sell the news kind of scenario. And so next quarter's margin guidance also came in a little lighter as the company ramps its newest 2-nanometer chips, so just more advanced chips, which cost more to produce in the early stages, hence the gross margin issue. TSMC also raised its spending plan significantly for the year and piled on another $100 billion specifically for factories here in the United States. So there's more proof the AI build out isn't necessarily slowing down, even if the market isn't necessarily rewarding it just over the last little while with the drop in chips. There's some fears that adds supply and that would break the demand shortage, or I should say the demand supply dynamic. So why are we seeing the stock down? Investors say there's simply no catalyst left to really push TSMC shares higher from here. The good news is already priced in. It's the same pattern we've seen with NVIDIA, solid prints that don't necessarily move the stock because the bar is already so high. And TSMC isn't alone. It's now the third strong chip print in a row. You had preliminary results from Samsung. You had ASML just yesterday, and they just get faded by the market. Pair that with the sell-off in memory names like Micron, SanDisk, SK Hynix, and a pattern really just emerges across the entire sector. Investors are taking profit after a historic run, rotating, sorry, you said it, into healthcare, Mag 7, and quietly asking whether the chip cycle has already peaked, guys.
Yeah, you wonder what sort of catalyst turns it the other way. If it's as simple as a rotation out of semis and into, the Mag 7, more defensive groups, under-owned, more shorted stocks, what changes it? Because if the fundamentals on earnings are good.
Yeah, so the fundamentals are driven by the build out of data centers, right? And so everybody's building out data centers. So what's the next leg? Some will argue it's going to be physical AI, but that hasn't really been, adopted by everyone yet. You had everybody doing the wearables, the robots, the humanoids, but that still has yet to really, really take off. So perhaps that would be the next leg, but we're still ways away from something like that. So that's why you're seeing this rotation out of chips now, because it's already all been priced in. Not much alpha left.
Christina, thanks. Yeah, the stocks now here in this drawdown getting close to 18%.
Micron potentially losing 850 here. Did it? Bouncing off 852. Yeah, so any little bit of a move we saw 20 minutes ago, that's getting reversed. Ugly day, folks. Definitely an ugly day. SanDisk officially getting a new bottom for today. CoreWeave as well, 73.15. Even the Mag 7s now are starting to get hit by it because the S&P is getting hit. Netflix somehow holding up, and United Health still holding up 6% as well. I will say, once again, it's July. And July is known for this type of a drawdown, which is, I think, what we are in the midst of right now. So as much as there's conversation about the semis trade has topped, I don't think the earnings have topped. And as long as the earnings haven't topped, I mean, dude, if the semi trade is actually topped, A, I wonder what the hell happens to GDP growth. B, well, CapEx has topped as well, which I don't think GDP growth has topped because we are spending a lot on data centers, which is 50% of GDP growth, even if New York is banning them. And C, CapEx hasn't topped. Like, we know CapEx hasn't topped. And if we get some indication of that next quarter, then that's going to be a totally different perspective. But from all indications, CapEx is still very strong. So again, I know we've said it a lot today, but today feels a lot more sentiment driven on a variety of different narratives around semiconductors versus the fundamentals. And literally, the fundamentals of TSM, ASML have been incredible. TSM right there, down about 2%. Oracle also still, is Oracle actually up today? No, Oracle 127, down 4%. Nabesis trying to not fall below 180 here, but she is close. Kospi also getting hit yesterday. Yeah, that didn't help. That didn't help our memory names. All right, folks. So we got to see what happens. I'll be back on the market close. Chris will be on the market close. We'll get his perspective on what is going on with either a potential rotation or short-term momentum-driven drawdowns on a lot of the semi names. I also wonder where it stops out today. I mean, does it just completely fall out across space and semis? Because again, the S&P is a little red, but it's not that red. Nvidia is not even below 200 yet, like it was a few days ago. So do we have to see that happening before this stuff takes a breather, or do we get a little bit more room before this one takes a hit? We will have Netflix earnings as well. So we will cover Netflix on the close. Then we'll have Chris on. I think that's the only earnings we have today. No, we have Intuitive Surgical. Okay, so Netflix and Intuitive Surgical. We'll take a look at that. ISRG, Healthcare Robotics. That's actually up 3% on the day. The stock year to date is down 30%. Netflix year to date is down 19%. So those will be two big earnings as well. And we will take a look at that. I also think, yeah, Martin, that's a good point. This Trump speech tonight, I think that's all, like, if he says something that's pretty dramatic around escalation in Iran, and he uses this speech as a primetime source of justifying why he needs to escalate the war, I mean, maybe stocks are trying to front run that. Maybe because there is no big headline today, right? Even retail sales, PPI, CPI. Maybe stocks are just trying to say, hey, the most high beta of high beta names cannot handle oil prices going up. And if oil were to spike to like 85 tomorrow, just based on whatever Trump were to say, that would not be the best thing in the world. So it's something we're going to have to take a look at tonight and see what happens. Okay, word of the day. Let's do that, and then we'll be back on the market close as Nebius loses 180. Complete free fall, 179.57, down 10% today. Stock was at almost 300 2 weeks ago, so completely has taken a hit. Word of the day is Weltschmerz. A feeling of melancholy or dissatisfaction arising from the realization that reality falls short to one's ideals. After the excitement of the bull market faded, a sense of Weltschmerz settled over investors who had expected effortless gains. I did not prompt ChatGPT to have such a timely word today. That's crazy. After the excitement of the bull market faded, a sense of Weltschmerz settled over investors who had expected effortless gains. I feel like ChatGPT knows what's happening in the stock market, and because I talk about stocks, look, my prompt was give me another one. That was my prompt. It's like, give me another word of the day. I feel like it's scanning the stock market and then it's applying the word based on the market. All right, here's how we say it.
Weltschmerz.
Oh, this has got to be German.
Weltschmerz.
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 Weltschmerz. Okay, I'm obviously not that good at speaking German, but that is your word of the day. All right, folks, we'll be back on the market close. We'll see if we get any level of dip buying here or if this continues to just be a good old-fashioned flush out. And if it is, then we'll see how the market reacts to it later in the day. And we will be back for the market close. Netflix earnings, Intuitive Surgical. We'll have Mr. Chris Patel on. And then we will keep going from there. Again, I agree with a lot of what Jose said. Fundamentally, not much has changed, but the sentiment shift on this stuff has been pretty violent, and we have to see how that plays out towards the end of the day. All right. Thank you, everybody. Appreciate it. I'll see you guys on the market close. Bye, everyone.